Everyone, welcome. This is London with the Crypto Kingdom. We have some exciting news. Now, we just did a live stream here recently, guys. We just did a live stream, but we have to come back to you because exactly what we said would be likely to happen, guys, it has happened. Okay, we had an early breakout from this consolidation pattern. So, as we were talking last night, we left the stream and we let you know that it was possible for us to receive this kind of, I don't know, just a real surprise kind of price action. We were thinking, based upon the previous actions, price actions, that it could have consolidated in this zone. That's what most were expecting before another move to the upside. Now that did not occur, and we explained that last night, how it was essentially predictable, and we went through the steps of it as to why we thought it would break out early. So that's exactly what we said last night, and guys, we've woken up this morning and precisely it has broken out to a new all-time high. So congratulations to all of you guys who are involved in the price action here. Just beautiful, and I'm so happy because we talked about last night. We went through accumulation strategies. If you listened at all to our stream last night, you did hear about the accumulation strategies that were going on in and around the lower areas after it went through this kind of a micro retracement. It wasn't a significant retracement, but Dogecoin is just doing incredibly well, and we're so excited about the fact that we could bring you at least the rationale, guys, the rationale under which you could expect this to go to the upside more quickly. So we can go through that rationale again. I'm not sure where you guys are at in your positions. We talked to some people who've been doing a great job trading Dogecoin. And that's what we do here. We cover Dogecoin. We love the price action. And you guys, you are very familiar with the reasons as to why. Since it has entered into our specific zone, our pricing target, right in around, what was that, the 20-cent mark. And let's see back here, 20-cent mark on the 22nd of April. Guys, we called this, while things were happening, while this incredible kind of fall off was occurring here. Yes, we called this entry price, bam, right here, as being something that would hold. It held right then, and that was a real critical time. We do have the VIP section of the channel if you guys would like to be plugged in a little bit to exactly, I guess, exactly how the Doge is going, to some insider information, some exclusivity. We think you guys will appreciate that and like that. I know it's early this morning, but we wanted to go ahead and just stream early. That's what we wanted to go ahead and do. So you guys, you'll see in the top left an invitation to our VIP membership. We have people joining, and it's a very exciting group. We think you will like it a lot. We're just up early this morning because, guys, it's very exciting. Since the time of our calling this entry point right here, and I really don't know another channel, guys, that is calling out an entry point, okay, and is watching that entry point increase to now 140, guys, 140 or 100, almost 150 is going to be 150% very soon. That's phenomenal, guys. That's more than 2x on your money. It's almost, it's just almost incredible. But in a 10-day period of time, it's a beautiful price action. We're glad that we're a part of it, and we're glad that we were able to bring you. Let's go ahead and clean up some of these Fibonacci's. We're heavy on Fibonacci's because they give us the entry targets. Okay, these entry targets are crucial. Like last night, us discussing exactly. I mean, literally, guys, we discussed the levels, and I'll go ahead and make these larger. But people don't know, how to necessarily invest their cash. We don't tell them how. I'm not into the financial advisement. That's not what I'm trying to kind of communicate. But I did last night, guys. I talked about the potential levels of investment as this was working down and I said real light in the first zone of investment. That's before, guys, it went up to there. So let's review quickly. Let's review quickly what we went over last night. Okay, we went over maybe $100 kind of lightly. Essentially, follow the demand curve when we're looking at these things. How to get involved in the price action. You've heard buy the dip. Okay, what does that mean? Try and get a better price on your Dogecoin, okay, or whatever instrument, financial, or let's say, what would you say, an investment instrument? I guess you'd say that, or investment concern. Try and get a good price on it if you're trying to attack it, okay? So when you see a retracement like this, we spoke with Space Ranger, had written in. He said he saw a retracement going on. He got out at this point, which was phenomenal. It was a great call by him because then it did retrace over 10%. If you can make that 10% or increase your position here by 10%, guys, that's how you double your money, and that's how you take advantage of the market. Let's say you beat the market. So Space Ranger definitely beat the market. It was right on call here. The same way we were on. Excuse me. We were on call with the pricing target at 20. Space Ranger, exactly, guys. He exactly called this this departure. So we talked about the different levels of investment. Okay, these different levels of investment would be 100, maybe 200. Down as you work your way down, there's more cash at the lower levels because we needed to operate like the demand curve, and that just means the lower the price, the greater the demand. Okay, so as you get into these lower levels, well, it could stack into, if we're doubling and tripling down at every tier, it's 100, 200. Let's triple down 600, triple down 1800. Maybe we triple down into 5400. Okay, that 5400 would have picked you up some Doge at least 10% discount. Let's look at maximum would have been. Yeah, right at 10, maybe almost 11% discount. That's significant, guys, if you're trading and you're looking at profiting. Others don't want to trade. They don't want to out-trade the market. We understand that. Others just want to enter into the market, okay? So once this is identified, which it was by, just shout out to all our guys, first of all. I have to just say good morning to all of our VIP guests. Good morning to all of our alpha traders, guys. That's why we're here. You guys are doing phenomenally well, and I just have to say good morning to Lars and Kent, to Matt, Angelica, and we want to talk to Bent Frog. You guys are our VIPs. You're doing great. That's one of the membership levels here at the channel. And guys, you're given exclusive access to some key pricing targets, just so you know that. The same that we went over this last night. We did that on the air in public. So that everyone would have access in terms of how to get in on this price action. And then what happened, guys, after we went through that, we talked about the fact that it could go to the upside more quickly. Okay, we talked about it going to the upside more quickly. And what happened? Well, from the entry spot, and we'll measure this two ways, but from the entry spot, guys, it's already up 25%. So in terms of the strategy, we use this strategy frequently. Guys, we employ this, or we teach about this strategy very frequently. Again, it's not financial advice, but it's just to kind of remind everyone that the money belongs at the lower levels of retracement. That's all the Fibonacci is, guys. It's just a way of measuring the retracement. So it's a stellar day. As you look at Dogecoin, you'll see it's up about maybe 11%, 10%. Understand, guys, it's really up from your maximized entry spot. It's really up. If we do this this measurement again, it's up over almost 25%. So excuse me. As we look at that, it's that's excellent, guys. That's how you maximize. That's how you achieve alpha. If you wonder about what is an alpha, he keeps talking about alpha traders, right? We have a session program where we're very in depth about how to achieve alpha. You'll notice the return on the board is about 11%. Okay, and you just saw us measure out the return at about 20, almost 25%. So that's if we can double the market, that's phenomenal. If we can instead just provide information on good entry spots, okay, good entries in the market on something that's really hot. It's very difficult, guys. I'll say it's very difficult. One of the biggest challenges is if you're not protecting, and most of you are, guys. Most of you are already involved. I know a lot of people watched our video last night, saw these figures, and it's just nice to be able to help people because I don't know another channel, guys. I don't know another channel that's walking through information like how should you get in on something that's just skyrocketing. It's one of the biggest challenges because you don't want to overpay. You particularly never want to become over leveraged at the higher levels. I always stack this idea here, and I had these highways up. I think it's interesting, guys. I had done these highways. They're calculated. I don't want to get into the mechanisms of how they were calculated. It's a little bit not confusing, but it's a little bit in depth for the channel. But I had put these highways up, and I said they were kind of acting like barriers, And as we looked at the pricing action, you can see where has this stopped. This has stopped right at the kind of the intersection of these two highways. I mean, it couldn't be. I've left this here, guys. I've left this here. That's exactly, guys, where it's kind of done its stutter step. So it did take off, and it took off, I think, within a very short time period. I think everyone decided to go to bed. We were exhausted. I was really exhausted. I could barely talk. I was trying to give all the information I could. I thought it could potentially break out early. We went through all those diagnostics and calculations, but I just had to tell you I was so tired. I have to tell you now, I was so tired then. Didn't tell you then. I was trying to fight and trying to get this live stream out. It becomes crucial. You guys understand when you see a price action that could move and people who could take advantage of it. I don't know. You have a show, a way of communicating. It's not that you want to stay around. Or you need to just needlessly. I'd say you don't need to needlessly create content, but you start to feel like maybe there's a few more people who should know about this. So that keeps us going on the live streams. Congratulations to those of you who are involved. We think the world of you guys. You're part of the community, and we have a special community because You understand, not just Dogecoin to the moon. All right, now yes, it's going to go to the moon. We like that, right? Everyone enjoys that. We love Dogecoin to the moon. So we love the memes. I mean, guys, I got to tell you, the meme just the meme is the meme. The meme is on, right? Yeah. I told you we're going to get a VIP shirt here for him. We may ask Sir Charles to go ahead and give us one of those if he could. I'd really appreciate that. If any of you guys are good at meme work or gifts, it would be awesome to have one of these with a VIP. We also have this. It'd be nice to have one of these, wouldn't it? For you guys who are potentially in the VIP. And yeah, those are nice little quips, nice little perks potentially. So we like to look into things like that. As you guys are exposing yourself to larger amounts of cash, I'll just say, before you get on one of these, before you get on one of these, maybe try out one of these, a cigar. And be careful how you celebrate, because that cash that you're making can disappear quickly. It's fun to make it. It's fun to make it, and it's also fun to make it again. So if you do decide to spend it, but we got some heavy rollers in our crowd. We have some VP managers of major corporations. We have a lot of different people, guys, that are involved in the crypto kingdom. Again, I am London, and let's talk about, we're at that 50-cent mark. So we're really now traversing as we talk. We're traversing, it looks like, into this next layer up, this next highway up. So this was essentially right on the money, guys. I mean, we couldn't have been any more precise, and that's what you get when you watch this channel. That's what the VIP will get, and the public will get a little special attention to those VIP members. I want you guys to feel exclusive and feel very appreciated. And we're going to be coming up with some, really great investment, ideas for you guys that you can review. Okay, so these gains, this 140% that we've achieved, and now, guys, you have to understand, for some people, they've just broken out of where they were involved in. All right, some people got involved in the hype and have held. A lot of people sold for a loss. So this has been a really dramatic. Price movement. If we don't know how to handle it, it can be very dangerous. It can sting. Okay, it can just sting, but it's not stinging now. It's finally broken back above, and this is let's see how far back we go when we talk about these other pricing actions. Let's look into this, and we've got that's about it's about 2 weeks ago, guys. 2 weeks ago, back into I measured this out quite a bit just to know. Some people got in about 18 days ago. They're up about 16%. So that's exciting, guys. They're up 16%, even the ones that got in around the top. So that's nice to know that everyone in Dogecoin should be in the money right now. That's exactly what we want to hear. That's phenomenal news. Congratulations to all of you. You are beating everyone. I mean, literally, your investment is you're untouchable. I told you yesterday my statement, and I made it to the VIP group. It was just, nothing can stop Doge right now. Nothing can stop Doge. Prepare for this, okay? As Elon's getting into SNL, this was just the statement last night. It's just very true, is that nothing can stop Doge. It's just doing extraordinarily well. You want to be a part of that price action. I know you also don't want to buy too high. So always, particularly as these start to get more aggressive, as you start to look into more aggressive price action, if it continues to go up, that's what we all want. Just expect more of a retracement if and when that occurs. That means more negative price action temporarily, so that kind of the infrastructure of the price work can occur. I'm going to bring these over. What we do is we will build in Fibonacci's at every level. Okay, guys, every single level we'll build in these Fibonacci's for purposes of trading, or purposes of, some people need to know at what level they should try and get in. They don't want to overpay. Every one of these, knocks off in a percentage. Every one of these discounts you can get is essentially money that, could be made. It's money that could be going to a good cause, or could, be just adding to your returns, and those returns are precious because you can't redo them. You can't. That's the one thing you can't do. I tell people all the time that the price can go in any direction. Okay, so from this point in time, the price can go in any direction. It can go up, it can go sideways, and it can go down. The one thing it can't do on a price chart, it cannot go to the left. You guys know that, but you cannot erase time. You cannot go back in time and redo something. So in terms of trying to capitalize on things, just want to let you know. How just always protect yourself for your your reputation, your ability to trade, and kind of how you perform in the market is going to dictate essentially a lot of times how much you enjoy the market. I guess I could say that is how much you enjoy the market. So let's look at a question. We got a shout out right now from Adam. Adam is back in the house. Adam's paying attention, guys. Adam's one of these guys that yeah, you're following the channel. I'm respectful of that very much. So we appreciate you being here, and the people who follow this channel, guys. It's not the flashiest right now. We've got some additional technology on the way. But it is one of the strongest technical channels, I believe the strongest technical channel for whatever we focus on. We've done a lot of work for Harmony on Harmony One. We've enjoyed that for Dogecoin. We've been hot on it since it's been super hot. And yeah, so we appreciate you being here. We don't think, and in fact, I know, guys, you're not going to find a better technical channel at all for trading. You're just not in the entirety of the space for YouTube, etc. So we're happy, and a lot of the reason for that is you guys. Like I said, with the VIP club, it's exclusive because you're a member in it, like, period. That's what makes the club work. So yeah, let's see what we have here. Do you expect in the short term if Doge touches 50? What do you expect in the short term if Doge touches 50? Yeah, that's a great question. What we're going to do is we're going to need to apply over the previous data. Okay, that's the best way that I can teach you guys how to perform in the market. Okay, whether or not you're watching, whether or not you're off on your own, kind of in the future. Let's say, like, if you're live a part of a trade while we're doing something, as opposed to if you can carry forward some skills in the future. I'd prefer you to be able to carry forward some skills in the future. Okay, and how I'm going to do that? We will use technical analysis and the tools. A lot of people understand the tools that they give us to trade. Okay, these tools essentially they allow us to capture and measure things. Okay, they'll allow us to capture, say, previous pricing events. Let's move this again. That was the Fibonacci we used to acquire last night, to put forth an acquisition model last night before we shot to the upside. I do want to talk about, and I'll definitely handle Adam's question without a doubt. What do you expect if and around you hit 50? The way to approach that, Adam, and everyone else, the way to approach that is we have a data set here. Okay, we have pricing behavior that has occurred before. Okay, and the tools that we're given, essentially, if we're going to talk about a trend line, okay, a trend line. The trend line is going to tell us how far up Dogecoin can go. The previous pricing action, if we were to measure something, let's just measure something randomly. See, this allows us to create a measurement, and let's just create a random measurement. This doesn't even really look like it's based on anything, right? Okay, that's going to be opposed to the notion of creating a measurement. Let's just create let's go from a low here to a high. Okay, we're going to go from a low to a high. Okay, great. Now we've specifically, excuse me, we have specifically recreated a pricing dynamic based on previous price history. So that's what technical analysis allows you to do, guys. All these tools literally bring into focus and to bear the exact opportunity for us to recreate, let's say a pricing action, a previous pricing action, which we could say, okay, maybe we want that to recreate. Let's see if we can recreate that. Does that even fit in here? I don't know. Let's see. Is that something that's repeatable? Well, almost. Almost. It looks like an interval action here. Looks like we have from a low to kind of what appears to be a high. Okay, let's see if that repeats. Hey, look at that. It kind of repeats. Do you see that? From a low all the way to a high. You see how the previous price action, the previous function, okay, does apply to that next interval. Well, let's see if it repeats. Well, wow, huh? Look at that. That's real close, huh? That's real close. Almost repeating again, a little bit more attenuated. So now you see a little bit of a difference in there. So we want to account for that. All right, this is why it's called it's a derivative analysis. I say that because it's not just an average. Okay, it includes some additional kind of parameters. As you see something repeat from time, bam, frequency interval 1, okay, to frequency interval 2, to frequency interval 3, and almost, guys, almost it wants to repeat. See, this is part of the variability, okay? That's a new variable that's thrown in. Okay, things want to extend a little bit, okay? They want to extend a little bit. So if I go from the next, we've been going from low to high, kind of low to high, low to high. You guys see that? The low to high right here, low to high. If we apply that over here, we're at, again, another low to high. This is the accumulation schedule, guys. This is essentially programmed money and programmed demand that's being thrown into your investment instrument. Now, we don't really have either. There's another subset, another issue here. We don't necessarily have a low, so we're going to have to kind of step it up. So we know things are becoming both a little bit delayed Things are delaying a little bit, but they're not falling off either. So now it's becoming more aggressive, okay? So it is waiting, but it is at the same time becoming more aggressive. If we throw this up, guys, look at this again. Now this is where you learn, guys. This is where you learn. Okay, look at this again. It did it again. Can you believe that, huh? Now this is just a random line. No, this is a specific line that we drew out to try and forecast into where things are going. Okay, and we started off way down here. All right, we started off with the notion that we wanted to recreate a low to a high along the trend line. Let's recreate again a low to a high along the trend line. Okay, this is technical analysis, guys. Let's recreate again. Okay, let's go from this low to the high. We need to find the low. This low is kind of hidden there. Hidden in there. So as we look at the low to the high, things become a little bit, they change a little bit here. Okay, but we're going to say this, if we view this as a pivot, we'll have to change to kind of a pivot analysis if we do this. We're going to say this low here. So what we're building is higher lows throughout the continuation kind of pattern here, this trend, the application of the price action. As we get into this, from this third low, all right, we're getting into a circumstance, it pushes out to the right a little bit. We don't have as definable as a low here, but let's still carry this over because it's hit 1, 2, 3 times almost perfectly, guys. Almost perfectly. With a small variation here, let's lift this up and let's give it a little extra room there right in here to hit this higher low and count this as a higher low. So a little bit of judgment call is necessary. But guys, again, you're almost perfect. You're almost perfect in there. So that's how these tools of TradingView, I always recommend people get involved in an advanced premium package, guys. This is how we're able to predict things. Its application, it's very simple. This is a very simple example as well. It doesn't involve calculations. It's a very straightforward example of what you're looking at in terms of applying the previous price action to the current price action. Because people will tell me all day long, there's no, and you can't tell me this. You guys know that I didn't call this entry point. I'm telling you right on we called this entry point. Exactly. You want to tell me we didn't call this exit point up here? I'm telling you we have the video on it. You can go back and watch it. We exactly were live and called this exit point. That we didn't call this entry point. And guys, why are these important? Because every one of these are dramatic price actions. I'm talking about 70% of your money. Bam. Okay, that's huge, guys. That's a big move. This in here, et cetera, et cetera. We can go back in time and talk about how we calculated things and what we brought to you live. But that's what this channel is. We apply previous price action. I bring up this right here, this previous price action, as opposed to this right here. But guys, if we're just to clone previous price action, I want you to see how this works out. You're going to see, you can right click on anything you draw up in TradingView. Get yourself a good TradingView. Make sure that happens today. If you guys are interested in technical analysis and running your trades well, make sure you get into TradingView. I like TradingView.com. If you're on Mac, okay, or PC, there is a program, TradingView program. You'll have to find the link. I can provide that to you guys at some point if you want to find that link. Okay, so you see how these cloned, let's see, we apply kind of a cloned constant to this, okay? And this is a little bit, again, we're kind of in the fuzzy area, but it's real close, guys. It's real close to a low to a high, a low to a high. And things start to stretch a little bit here. That's okay if they become a little bit more attenuated. We still have this beautiful low to high, low to high. What has changed? Because this is the exact same line. This is what makes it so predictable. And the thing about this, when I talk about the fact it's gone up 140%, but some people, okay, are able to trade this and make 200 to 250%. Now you guys understand. Like, wow, if it's this predictable, yeah, there's probably a way, guys, to get in and to trade this and to capitalize on every one of these breakdowns. Okay, every one of these breakdowns in which time you're actually doing a retracement. Yeah, every time you get into a retracement here from the top, let's say from the peak here, yeah, every time we get into a retracement on this peak, yeah, we're going to be able to capitalize on that. And we're going to be able to, get out, get back in, get out, get back in. Guys, it's just it's a function of the market. Things go up, things go down. This retracement last night, huge, because we did talk to, and guys, I get these messages all the time. You guys need to know that. I get messages about people who entered at the perfect time. So last night was live. You guys saw a Space Ranger had showed up and said, yeah, I got out perfectly. Okay, I saw the retracement and perfectly I got out right at the 44. Beautiful, beautiful. So what do we immediately say? Well, when that occurs, and I don't know if he had been working. Hey, shout out to Basecamp on Mana. Hey, nice to see you, Mana Deprivation. All right. Well, you got the base camp working. Guys, we called it base camp in and around this area because we knew we were going up. We covered Dogecoin. We put together a base camp literally in this area because it was just clear we established a trend line, and I wanted people to know, like, Mount Everest has a base camp. Yes, we are going up. I don't want there to be a big question in people's minds. If you chose to trade it, great. Now you're starting to see these are the functional utilities of the program, which can be applied to your trading to allow you to achieve something like alpha. We have some alpha traders who understand the application is kind of a derivative gain analysis, okay, a profit analysis. How do we profit in excess of the market? We've already done that, guys, because we exited here. Okay, we exited this at this previous price action. It was just the threshold limit. It had been reached. So why would we stay in something, guys, that's going to eliminate its value by 50% when we can make that full 50%? Why would we do that? We would have no reason to do that, guys. We'd have zero reason to watch things go down, or the value of our account go down by 50%. We'd have zero reason to do that when we can avoid it. And then we can recapitalize and we can put all these profits back into Doge or whatever we choose to put it in, into. So that's we're very consistent with that, and we welcome you guys as new or returning members, loyal subscribers. You're doing a great job. So let me get this out in front of the. Look at that. We've been covering up the price, and we didn't. I knew we wouldn't have long to get into this most recent question. Adam, you know what I'm doing in terms of the derivative analysis. I did anticipate. I didn't want to shirk your question, but I had a feeling that yes, he just asked about what do you expect in the short term if Doge touches 50, because I thought we wouldn't just touch it. So Adam, I did give you a second there on your question because I wanted to build in. Believe it or not, I wanted to build in the previous pricing zones, and then I wanted to give you a. I started talking about the kind of this former price action, and here it's more aggressive. So we're going to talk about the consistency approach here. Okay, we did talk about some kind of at least a consistency of not becoming more aggressive last night. That's the nice thing about essentially the stream last night. Now, maybe only 100, maybe 200, maybe 500, maybe 2,000 or 8,000. I don't know how many saw it. It's a highly technical crowd. You guys who are able to get involved and say, yes, this is the approach. It's not just deciding what you want to invest in. No. It's deciding at what price you want to invest in, at what price you want to get out. So, and we just don't ever want to buy into something. We want to accomplish the buy-in here. Okay, and that's what we went over last night, and we were willing to be aggressive on that money. You guys know we literally kind of spoke through and just spoke the truth about being willing to invest larger amounts of money. So anyone who followed in with that, no one got burned last night. I'll tell you that much from watching our show. No one got burned, and Doge has just been unstoppable. That has been literally from a technical standpoint. Some people have a problem with Dogecoin. Great. Go find something else that could be transacted and be espoused by some of the top businessmen in the world. You go find something else, okay? Something else hotter in the market right now. And you know what? We're not going to hate you. I'll tell you that. We are not going to have any kind of animosity or anything. So people who want to hate on Doge, if there's a big long line of people who don't like good things, and that's just you guys have encountered that in life. That is not what we need to be about. So. We're here to provide you technicals on a technical basis. Dogecoin is phenomenally exciting, and that's why we've chosen to focus on it, okay? Last night we gave in these retracements. That's what we do. What do the retracements inherently have, okay? If you watch the channel, you know our investment levels. As we get into lower levels, on lower tiered, in terms of the retracement, what we do is, and a retracement is just from the initiation of the trend to the top of the price movement, on a kind of a specified interval. You can either apply it, guys. You can either apply it to the aggregate, okay, on the whole, and let's just zoom on out to the aggregate. You can apply it to this aggregate, okay? Okay, this is a Fibonacci. This is a retracement into the golden pocket, all right? You can also, if you're trying to acquire in, if you missed our pricing target here, okay? If you missed our pricing target, if you weren't plugged into the group, okay, you need to make sure you're plugged in on moves like this, guys. And this was not live. I'm going to tell you, this was in the background, specified me to a specific number of individuals. All right, this was below 20 while things were falling through the floor, while Bitcoin was having big problems, big problems. All right, I called this directly to people. Bam, this is the pricing target. We woke up 6 to 8 hours later, it held perfectly, guys, just above my pricing target. A beautiful move. Since that period of time, I'm going to tell you, okay, it's gone up 100 and maxed out at about 176% now. So that's almost 200% up. That's nice, guys. That's nice. That's from 20 cents to 50 cents. You're looking at 176%. That's in a time frame, guys, where a lot of people were trying to recapture and even get to a higher position than what they were at. So in the meantime, we're out. We've cut the trade up here. We cut this trade, got in at a lower price, as this was a drop of 50%, right? Instead, we don't lose 50%. Instead, we gain 180%. Now, with the interval application of the technicals, guys, as this interval application goes, all these green lines, again, to review, all these green lines are exactly the same. I cloned these. Why? To show you some technical analysis. Okay, to help answer the question that was just kind of asked, like what's going to happen now that we hit 50? We're at 51 cents. It's just continuing to cruise up. I'm glad I went through an accumulation schedule last night, guys. Went through an accumulation schedule and let you know it could definitely achieve some positive price action, okay, along these highways. Okay, it could cross through these highways more quickly. That's what we said last night. Then going through a typical consolidation. So that's the level of technique and expertise or skill that we're able to apply. And guys, I used to be a financial analyst right out of college, out of Duke. I went and worked with a big timer, a billionaire, and I was the lead analyst on his $1 billion equity fund. We were working right across the table from Harvard. So their Harvard Foundation is very particular on their specifics. Okay, they want to know exactly what the numbers are. So that's why I'm precise. Okay, I have that. And since then, a lot of good, I'd say a lot of good experiences to bring to the plate, including advisor to the commander-in-chief. That was a nice role for me to play. So I'm happy to have done that duty as well. That just kind of service. That was nice in terms of being able to serve for a period of years. Yeah. So as we bring these forth, again, I can delete any one of these. I can delete any one of these and just watch. I can do that, and then I can say, well, let's stick with this one. Great, let's clone it. Let's clone it and bring it back down here. And look, we're still right in line, guys, with the low to the high. And then we have retracement. This retracement is what you don't want to be a part of, guys. We have the low to the high. All right? Then we have this, retracement. Now, you can accumulate during there, but it's not necessarily something we want to be a part of. The price is going down. We buy low, we sell high, right? Then we have a low to a high, right? And this is a little attenuated in here. We do get a little bit of a stutter step, but then we have that low to that high. And when you say buy low, sell high, people don't know what does that mean. Well, we get involved in kind of an interval analysis, guys. This is how people trade and make money. This is the same thing as here when we said this is the pricing target, and guys, we said it here. We said it right in this area. This is the pricing target. We gave this pricing target here, like as a matter of fact, on screen. 8,000 people saw it, okay? And that was a big amount of people to actively trade it, okay? We saw this pricing target here. We called it at this yellow line, okay, a day in advance. I mean, well in advance, days in advance, okay? In and around from this area. It was just an application of the Fibonacci, but you have to draw your Fibonacci's correctly. I will state that. You have to know what time frame you're in. You have to know whether or not you're on the lines of the candles. People, they find it a little bit mysterious. It is mysterious, okay? In terms of it being an exact science, it's not. TradingView is not perfect. It has some quirks, and the timing intervals and the limitations of them, if you don't understand the limitations of the timing intervals, then you're going to run into some limitations in terms of your ability to forecast. You have to understand how everything congeals, okay? So let's just review this. The question is, once it touches 50, I didn't necessarily breach that issue, that question, particularly while it was just asked here on the super chat, and for no poor reason in terms of no judgment call or anything in a negative sense. But Adam, I wanted to say, I wanted to bring this up. He's our beach guy. What's up, Adam Beach? We like that name. It's a cool name. I wanted to bring this up, that we may be dealing with something. There's one of two options that I see right now. We're either going to apply the previous interval, and you guys don't worry about all these blue lines. This is extra equipment I have stored over here. Guys, these are timing intervals. These are all types of things that I have stored on that I essentially can lock back into place at any point in time. So let's see if, what is this here? I think I can move it like that. Okay. I want to try and clean up a little bit, but I still have these highways, guys, because we need to cross these highways. All right. And how we do that and how we specify essentially, I mean, let's say specify profits. How do we predict our profits? Because that's what everyone's going after here. And for some, it's enough just to hold. It's just enough to hold. For those of you who are holding and that's it, we salute you guys. You're kind of the bedrock. But I also feel bad because some of you, the same mentality sometimes will lead people to buy at a too high of a price. So that's the same kind of sincere approach that they want to get into the market and they just love the market, they love the coin, they're emotionally involved. That's beautiful, guys. I love to see that. At the same time, I draw a triangle, guys, because we're always, whether or not it's on the whole level, okay, or on the let's say the macro level like this, or on the micro level up and around here, we're always looking at kind of like I'll bring up a triangle, okay, and that's just an example of heavier levels of investment at the lower side, on the lower end of things. As the price drops, we expect a heavier level of investment. Why? Because then that allows us, like at this golden pocket, that allows us to either ride up after a crucial level has been met, that golden ratio, guys. Okay, it's just a level of retracement. It's a percentage of retracement or drop in the price based upon the initiation of the trend, the positive price action, and the limitation or the apex, the peak of the price action. Then it's going to retrace. Okay, you see these figures on the left. Those figures on the left literally are, guys, they're the 23, okay, 0.6%. It's 23.6% of retracement from the peak down to the first level, okay? This next level, Fibonacci, is going to be the 38.2% retracement from the initiation to the peak, 38.2% retracement. These are the pricing dynamics built into TradingView. TradingView is provided to us by Binance, the largest exchange in the world. This is their software, what they expect us to kind of use. Now, they wouldn't give it to us, guys, on the front page of Binance if they didn't want us to use it. So that's what we do, is we use it. And we've configured just an idea, okay? And I have it's a strategy. It's an idea. As these tiers go down, bam, we throw different amounts of money into different ones. Why have I conjured that up? Why have I come up with that strategy? Because, guys, I've listened to some of the top players that are involved in crypto, and I'm talking about trillion-dollar institutions, okay? They have said at different levels they are prepared to double down. All right? Having that double and triple down is at 100 to 200 double. Then we start to triple, 600, triple, 1800, triple, 5400. It is a heavyweight approach in that your money is aligned, okay, towards the bottom levels more heavily. So I call it the heavyweight double or triple down approach. Double and triple down approach, okay? And that's because at the top levels we just kind of pepper in. We just want to pepper in, no problem. That's because typically the trades here will hit at a lighter level as well. And there's a chance it could go up. It could just not retrace much and continue to go up. But I'll tell you, the likelihood is ultimately it's going to retrace to something more significant, and heavier cash is going to be waiting at these lower levels. How do I know? Well, I know that because look at what's happened with the heavier amounts of cash that have kind of rolled in since this golden pocket, guys. It's just been, there's enough there to work with in terms of demand. Now Elon's helping that, definitely helping that as well. The people who made money at this lower level here that have been around on the channel, we've been talking about heavier amounts of money. Okay, what I did last night, okay, people want to, and you guys need to listen to this because I get a lot of flack on this channel because people say, well, who wants to sit there with all their money on the bottom? People are here to make money, right? People tell me that all the time. Let me say, I get the feeling. They don't necessarily tell me that. I get the feeling that they don't want to be as kind of disciplined. So no, people don't tell me that all the time. In fact, I don't know if anyone's ever told me that because I'm always recommending people, just a recommendation, just a suggestion, do your own research, DYOR, right? And not advice, but I just recommend, please keep your cash towards the bottom. Please keep your heavy amounts of funds towards the bottom because, honestly, towards the lower levels, because honestly, guys, when you don't and you involve yourself at too high of a level, and you're over leveraged, that's when you come to me and you want help. And I'm like, oh no, we can try and make a magic solution here. It can happen, but out of just all the goodness in the world, I would prefer to not watch people become over leveraged. And guys, that's part of the function of the market maker. He's going to take out the advertising. He's going to push the notifications to the cell phones. He's going to get people excited about it when it's going parabolic, guys. When the launch is happening and everyone sees it's up 30%, it's up 40%. I have to get in. Well, that's okay. We saw this yesterday, guys. We saw a great price action, then we saw a retracement. So there's always going to be a retracement to get involved in. And that's where you start calculating. That's when you start saying, oh, I see. So don't get it when it's going up. Let's get it when it goes back down. Let's pick it up. And guys, it's consistent. It's part of the growth pattern. It goes up, it goes down. Let's look at the way these stair steps have been built. And guys, this is phenomenal for you guys in terms of training, in terms of what you're learning right now. I mean, look at these. These are all cloned. These are exactly the same. A low to a high. A low to a high. All right? A low right here to another high. You don't think people are trading this? Like beautifully? These are exactly, I mean, it's almost like you're giving up money if you're not. I'm just going to tell you that. If you're not willing to trade it at all, because you're always looking for the greatest coin, you're looking for the best investment. Guys, if you're looking for a decent approach to your investments, I might pay attention to this channel because, you know, this is the type of, this is kind of the framework of the strategy that we've included along the way. And you can't argue, let's just say this, you can't argue with the facts here. The facts are repeatedly low to a high. Low to a high. And I'm saying right here, low to a, we have a trend. Boom. Right? We have a trend. You guys know, look back on the videos. There's a low to a high, a low to a high, a low to a, we have a trend. All right? And sure enough, this carries over, this carries over, it carries over. Now the question is, what will carry over next? Where will we head to next? That's why I put these highways up. Now look what we've done since we've been talking, guys. We have just broken through the highways. Okay, so last night, you guys know I don't do this frequently. You who pay attention, okay, and some of you do pay attention. You know I don't sit there and talk about big amounts of cash like 100, 200, 600, 1800, and 5400. I don't necessarily just throw that on the wall there in terms of what would have engaged or could have engaged at these levels, etc. Okay, it was very clear technically last night that this schedule had the chance to break out to the upside. I had the highways here last night. Okay? We've broken through that. Now, what I say is I very rarely include figures like this as applied to something. When you're looking, guys, you're looking at investing, wondering what to do, and I'm talking about throwing in, like, let's say an amount of like 5,400 in and around this level. Because I have to be careful, guys. I have to be careful. Do the technicals even support it? I can give you an opinion. I can give you a technical opinion, but if the technical opinion is not supported at all, guys, by the technicals, then you know it's just not gonna fly. You guys are gonna know that. You're gonna see right through that. So those of you who are paying attention, and listening to a reaccumulation, let's say a retracement strategy, a profit strategy, yeah, you understand. We did discuss this exactly. Let's throw a polyline on here as we look at. Let's look at this consolidation here. And we'll get to the new high. It's phenomenal. We were hitting 53 cents. Fully expected, fully great. That's that second. We always said we need the first to occur. We need that first level. Then we need that second level. So we just hit that second level. Look at this retracement that occurred in the pricing action. Let's bring it up in here. Okay? Now, we had a few things change. And last night I said it would not be surprising at all to see this move to the upside more quickly. Okay, and after I had brought up, guys, literally we finished the show, and as soon as you got into bed, if you watched the show, as soon as you got into bed, it seems like it just started to take off. Okay, so it was great timing. Anyone who paid attention to the channel, you're doing phenomenally well. I know you are. You're communicating to me that you are, and I know. I just know what's being presented on the channel, and it's exciting to see that. So we can go through the reasons as to why I went ahead and talked about heavier levels of investment, kind of up top. Guys, we're in a bullish market, right? And people always want to know, can you get to the point, London, please, where maybe we're engaging some more cash, a little bit more heavily, right? Because you're in the market, you have a specified amount. It's great to have resource cash. You always have to have it, guys. You always have to have that backup cash. All right, and as I'm talking to my VIP members, we'll go through maybe some different, more advanced strategies, etc. I hope you guys liked that tweet from this morning. I did, and I'll share with you guys. This here. This is nice. We're going to make someone with a VIP, maybe Crypto Kingdom. This is from Sir Charles. If you could scrape one of those up for us, that'd be great. But I have some good contacts for you VIP guys here in the next 24 hours. You guys are going to enjoy that. And we're happy to have you here. Happy to have you as part of that membership, that elite exclusive club. And I just say right now, you're doing well enough. It's a perk within itself. We're going to be getting the girl who did the design work, Megan. Shout out to Megan and Kevin, the team from that Megan had worked for the U.S. Open, the tennis championship. I got that wrong last night. She's going to kill me. Hopefully she won't listen to that portion. But I think I said 2 or 3 different championships or something. She's going to want to kill me. Megan, I love you so much. Thank you for everything all along the years with all the design work. And I'm sorry if I just butchered the notion of that. Let's talk about where, but we did get it right there. We're going to have her, the designer, essentially come up with our design for the Crypto Kingdom VIP cards. They're going to be sweet. They're going to be really sweet. You guys have no idea what they're going to look like. You're going to be like, whoa. You're going to get it. You're going to be like, oh, this is nice. Yeah, it's going to be real nice. You're going to love it. It's going to be really cool. So as we look at this, okay, we have kind of 2 different options. This became more aggressive. What's the tolerance threshold level of this price action? As it looks like it's broken through these 2 highways. We have cleared the road, all right? We have literally cleared the road, that's nice, guys. We'll see how these function in the future. Let's just say that the critical thing last night was our bringing up the higher levels of investment. Okay, just figures talking about 5,400. This normally we're not talking about necessarily that amount without a real big qualification as to. But you know what? Really, you have to have huge amounts of reserve cash underneath double and triple down. I didn't want to feed that to people. Okay, I didn't feed it as heavily as I normally do. Why? Because the technicals were pointing to a move to the upside within a great degree of probability, guys, within a great degree of probability. So that's what occurred. Literally, we shut our machine off and bam, okay? If you put that $5,400 in or whatever that higher level was, bam, you went to the upside. You've made phenomenal cash, okay, just in a period of hours. Now, when we start talking about making phenomenal cash in a period of hours, I want to bring some caution to the table. That's 38%. If you used our signature kind of move here, which is just incorporating the technology, guys. It's just the exchange software. That's what this is, okay? This exchange software literally has allowed us to let's say strategize up to 38%. I don't know if you want to call it day trading. I don't know what you want to call it, but we're consistent enough on this channel. This is the program. This is the program move here, guys. You see, and Space Ranger brought this up. He saw the retracement. Bam, he's out. Beautiful. Now he sees the opportunity, and I say we draw these quickly, guys. We see the retracement. Perfect. Bam, bam. We're in, guys. Perfect. We have our levels scheduled up. These are our prices. They automatically shift up. We know 42.9, okay, 42.0, 41.3, 40.5, and 39.5. Those are all written down on a piece of paper. Bam. Those are our levels of reinvestment. Then we have, let's say, $100 in at the first level. We have $200 at the second level. Then we have $600 at the next level. Then we have, program trades, guys. These are limit orders. Then we have $1,800 at the next level. Then we have $5,400 at the next level. Now, it may be much more simple than that. But within that time frame, guys, within what? Within 1 minute, you're able to enter trades, to exit and enter trades to take advantage of up to 38%. While maximizing your profits while guarding against risk, only involving your money at lower levels. It's going to retrace. We identified the retracement. You guys identified that. No one can argue with that. Great job by Space Ranger. He brought that in on a super chat last night. I appreciate when you guys let us know, let the group know about how you're doing and what you're doing. That's one of the benefits of the super chat. You guys, very nicely done in terms of your identification of this. And it is possible. You have to watch what's going on with the price. You have to watch the momentum, the speed. Okay, you have to pay attention to what it's doing. So that's you have to calculate in kind of the previous zones here as we're looking at. Exact carbon copies, guys. This couldn't be much more simple. We couldn't find much better of a program trade environment, guys. This is literally from the call that we made, that we published to our select few group of guys. All right, and now we're putting those guys together. They're in the VIP club right now, so we're excited about that. You guys have watched this on the whole. There's been no this is the crisis crux situation where everyone's going to miss the boat. I'll tell you on this fallout. Okay, that's what you want to know. What do they really get? What's exclusive about it? I just tell you, the group that's close by, bam, you're getting this. That's the key. Bam. amidst the hurricane, amidst the terror, amidst what all's going on, bam, you're going to get one key, solid, stable kind of opinion that, bam, there you go. Just an opinion. It held. Look at it since, right? So you could have held since that point in time. You could have. Or, we could trade. Oh, yeah, look at this. Just repeatable program trades. Beautifully done. Beautifully done. Okay? And these are all, guys, this is just people making money. So it's easy enough to do. You saw how in about 10 seconds or 15 seconds, you're writing down, guys, you're writing down everything from, let's go ahead and push this back in. But you're already, once you identify the retracement, look, you've identified it, and what does that give you when you identify the retracement and draw up your Fibonacci? Immediately, you have your target zones. And immediately, if you already have your pre-calculated, I tell people to do your own calculations if you'd like to. Do your own calculations. Why? Because you may have a better theory. You may decide, you know what, London, I got to tell you, man, I appreciate the show. It's pretty cool. But check it, man. I only have a golden pocket. That's it. My Fibonacci just looks like a golden pocket. That's all I run. I may be like, great, man. How's that working out for you? See, I want you to do your own calculations. If you just want to pull up a Fibonacci retracement and, I just focus in on the 61.8 to the 65. That's all I do. That's all I do. Well, cool, man. I want to hear how that's working out for you. Are you picking up everything? Is the market maker picking you up every time? Is that the crucial kind of return level here? Is that, focus all your cash. If you playing with 10 grand on top of, say, you got 100 in the back, you want to throw in 10. You want to make today, you wanted to make, or since last night, you wanted to throw in right here 10 grand. You wanted to make 3 grand, and you're going to be okay. Yeah, that's kind of your week. That's what you kind of want to roll with, right? Yeah, you got about 10 grand. You got maybe 100 behind it. And you're just going to have fun. Just enjoy yourself. 3 grand this week, no problem, right? I just bring that up. That's a trading style. That's I know a few guys that are good investment bankers from J.P. Morgan, et cetera. From Morgan Stanley to J.P. Morgan. That's a good return, guys. People look for that all year, right? They literally look for opportunities like that all year long. They're looking for that 30%. So that's nice. So that may be your own calculation. You may say, I don't need all these double and triple downs and exposure at lower levels. I'm fine. I understand at a lower price. I engage at that 61.8 to that 65% retracement again from the initiation of the price, from the beginning of this price action to the upside, to the peak of the price, the retracement, the percentage that it gives back. Okay, it's already done for us, guys. It's already that 61.8 to the 65%. It's already built in, right? So we like that. It's easy to work the program. It wants to work itself. I just tell you that. It just wants to work itself. So it's difficult for me to say, not to say work your own calculations. Okay, and some of that it requires some advanced kind of knowledge of TradingView, how to do something like work just a golden pocket, or to say I'm going to apply over the Binance figures exactly. I want to recreate kind of what Binance looks like. Let's do that this way. It requires some skills, some technical skills. A lot of you have those skills, you just haven't applied them to TradingView. That's kind of what I'm trying to specialize in right now. I don't have it 100% perfect, but I have a highly technical background. Okay, I've a highly technical background. Studied everything from intelligence and had a lot of success in the field of studying intelligence. With teachers from the FBI and the CIA, some guys that taught me a lot. And I don't work with them at all. I'm not affiliated with any department, agency, bureau, nor military division, domestic or abroad. I am just trying to be a good guy and and let you guys know about technicals. I was at the top of the school in terms of 40,000 students. I was around the top. So perfect 4.0, et cetera. So that's just because I always tell people I'm not the smartest guy on the block, but I work harder than everybody else on the block. So that's typically in terms of technical analysis. If you really focus in and hone in, we'll get those skills that we need to be able to achieve. A lot of it is just the approach. How can you apply your intelligence to this? How can you say, I want these prior pricing actions to profit me? Okay, great. How do we identify it? That's step one. Let's identify it. Maybe step one, what's the goal? You want to profit. Step two, well, how do you identify a portion of the trend or something that's repeatable that you can profit on? Boom. And we bring that up because, 1, 2, 3, 4. I mean, those are 4 beautiful doors to walk through, I'll tell you that. Every one of them has more money than just, as people want to know, what is the Alpha program? We have a Discord that's, we'll pin that to the top. I'm sure that's been discussed, but we do have an Alpha trading, sessions that go on, guys. And what does that do? You see those repeatable patterns there? What do those repeatable patterns get you? They get you profit. In excess of what? In excess of the market. Even this, guys, in excess of this market from this entry spot that I brought you. Okay, and I brought you if you were on the inside then, etc. Just if you were involved with me in the Doge traders, we have a Doge traders forum, guys, in our Discord. If you guys want to throw up that link, I'll pin it to the top. But yeah, in excess of the, and this is what people will get to, in excess of 200%. That's right, in excess of 200%. Okay, while Doge has been trying to quote unquote recover in this area, yeah, while it's been recovering, yeah, we were out here. Live, guys, live stream. We were out here. This was our target. Heavily involved here. Okay, with cash. Heavy orders were going through that level. Okay, we gave you that level days before. All right, that's what we do here. We find these patterns. This is what we work on. We work on establishing trends and profit models. This is all within the strategy of what we're creating. Okay, and I bring up this previous, so yeah, in excess of 200%, guys, in excess. Because people want to say 200% is enough. Sure it is. It's nice, but, we have to kind of stay busy. We love the market, That's what we do is we love the market. Like, that's it. We love price action. We love beating the market. That's the best thing. If people are up 200%, we're like, yeah, 316%. 316%? No way. Everybody else made 200%. No, man, actually, a lot of other people had gotten in and didn't make any money. They were just starting to get into the money, right? Because they went down 50%. So this is what I'm talking about. The overall price objectives, the overall pricing is very important. We'd love it to go to a dollar. When it goes there, we're going to be happy. It's going to be a celebratory moment. Everyone's going to know about you. Anyone who knows you were involved in Dogecoin, they're going to know about you, right? And that's phenomenal. When that happens, you're going to be like, yeah, now you know me, huh? So we love that little thing. Just be nice to everybody. That's what I'll say. In terms of your success, always be nice to people. But yeah, that repeatable, let's say the 200% that you've achieved now, that's when you got in at the right price, guys. That's when you got in at our price, our pricing target. That's what we do. That's what I mean by pricing target. Bam, that's a great opportunity to get in. Like last night, I provided, pricing targets. I talked about the fact last night, you're up 200% from our pricing target. That's the exact level to enter into while the market is crumbling and going down and the sky is falling. I'm getting the information out. Bam! I was like, guys, this is it. Within, guys, it was literally in a free fall. I'm like, enter. This is where it needs to happen, right? Based upon the calculations, guys. It's not a random figure. I'm saying this is my opinion. Not at all. It's calculative. This is all. It's not as much of a mystery as we want to make it. It's not that far-fetched. None of it. It diagrams itself out. All right. It's diagramming itself out for us. It's showing us that these are repeat intervals, exactly repeat intervals. Oh my gosh. Everyone's like, oh my gosh, huh? Because the nice thing is you understand if we can make 300%, for instance, on a 200%, while other people are just trying to recover their price action, I mean, that means that we've probably, and I did this beforehand, but guys, while you were going sideways here for a period of time, believe it or not, there was 400%. 400%. Guys, just in this period, this period of time here, 400% had been made in here. Excuse me, 400%, 4x, guys. That achieved a 4x in here. I don't have to go. You guys who have been paying attention, you know that. Guys, as sure as these are repeat intervals right here, the low to the high, the low to the high. Okay, that's the high. This previous low to the high. This low, again, up to a high again. Yeah, 1, 2, 3, 4. I talk with people about stacking things. You get, in terms of your exposure to the market, yeah, we want to stack. All right, we want to stack. We want to create extra ones of these. I'm talking about profits. All right, you've made 200, great. You're 200%, great. On our pricing target, I'm happy for you. If you entered in, thought that was a great deal, you want to hold that, great. We stack. We want those amounts of cash, okay, that we're doubling and tripling. And we just want a big stack of them over here. We want 20, 30, 40, 50 of them. We can do that if we trade well. You guys can now see it's so predictable, guys. It's just so predictable. So now we're into this kind of higher level. And guys, I drew the roadways up there. Now, I won't go through the full extent of why we believed last night this was going to break out early. We did say that live, guys, on the live stream. I brought up the fact I anticipated that this could break out early. The technicals were telling me that, okay? It was telling me that it was going to break out early. So we went through kind of a heavy investment approach. I went through kind of some heavy figures with people talking about, and still trying to get a good price, I'm going to tell you that. But we went through some heavier investment, some investment features, talking about investing up to $5,400. Talking about it breaking out early. And these were examples. I said, do your own calculation, not advice, etc. But I wanted people to kind of get it that, yeah, it looks like it's going to move up. In no uncertain terms did I say that. In no uncertain terms. Exploring the possibility. It could go sideways. It could go down. We're prepared for everything. We're always prepared for everything. Okay? So, we just, tactically, we have to be. We have to be prepared for either a protective stop loss. I don't always talk about these. Either a protective stop loss, okay, to exit this trade if it becomes, too aggressive on the downside. Okay, if it's a blown trade, that's technical, guys. If you look at principles of technical analysis, okay, it's going to include information on protective stop losses. Okay, typically it's nice if you're just involved or you have enough cash below this, you don't have to get involved in that. You can still own it. You don't have to go to the trouble of setting a protective stop loss. You can still own it. And you can own the trade and your risk at the higher levels through larger amounts of cash. So if you have 5,400 here, it's kind of a nice day. Throw in 5,400. Throw in your 8,100. Just throw that in somehow in here. Get that as you like to see that thrown in, right? But at the lower levels, and I'm talking about the lower overall levels, guys. As we look and we drown back out to something like this. Now this here, this is getting left behind right now. This whole previous. Let's say this previous Fibonacci, it's been reestablished, guys, by a different trend. So as we look at this low to high, okay, this is repeatable perfectly, guys. You see this? You see that? The low to the high. Okay, I just want to pause for a moment. The low to the high and the low to the high. These are all repeatable events. In and around here, this low to the high, you've got two repeating patterns. You've got a trend, kids. Boom. Perfect, right? So that's when we start to really trade and look into things a little bit more aggressively. We're in a bullish pattern. So the whole notion people want to, because sometimes I'm very conservative. I'm always talking with people about protecting your cash, making sure you have the reserve underneath. I still believe in that heavily, guys. I always do. I always have big amounts of cash underneath me at lower levels so that if I need to re-engage, some of you are thinking about getting in right now to Dogecoin at higher levels. If I need to re-engage, okay, I can at a lower level and I can cover any of my upside exposure. I'm never trapped. I'm never over-leveraged. Never. Not one time are you going to find me where I'm over-leveraged. So that's the idea. So when we do talk about being more bullish on something, do understand that that's nice. That's real nice, particularly if something just looks technically like the probability is, let's say, 90%. If you get into like a 90% confidence interval that, yeah, you're going to go to the upside here with the next number of hours, it's hard to not try and communicate that to someone with some aggressive figures. I'm just going to say that as a hypothetical, still as a hypothetical. It's just difficult if you're watching someone with a 90%. I mean, you're walking by somebody and you have a best friend or something at the table, and you're like, the guy doesn't even know he has blackjack. He doesn't know how to play blackjack. He's got that 21. He's sitting there, and it's like you want to help your friend, right? You want to try and do that, but a good strategy might be to bet more there. Now I'm not a gambling expert, but I want to tell you, if you're walking by your friend, he's got a 21 showing at the table, you're at the MGM Grand or you're at the Bellagio, wherever you're at, yeah, okay, you're gonna probably tell your friend, if you care about your friend, like, put the cash in, So on a hypothetical level, again, I'm not a gambling expert. All right, I'm not your financial advisor, guys. Those are not the shoes that I want to put on in the morning. I don't want to be involved in hammering through phone calls and selling people something at too high of a price. But we have phenomenal results, guys. You guys who are following us, we have phenomenal results on this channel. I mean, super fantastic results for a reason. We are very disciplined here. We do not go to the whims and fancies. Okay, we're not involved in the hype. We get involved in getting excited. We absolutely get excited about returns. You're up 200%. We're up 200% from the initiation of our price, from our pricing target. Okay, bam, that's our pricing target. I've got it on tape. I've got literally the screenshots of it and everything, guys. Bam, that's our pricing target. All right. while it's falling through the floor, the sky is falling, and I'm like, bam, we're in right here. All right, 200% since then. Beautiful. Since then, also talking about trading, I was like, you can't trade this, you can't do this. I know it's been kind of skeptical. People have been trying to understand it, but this morning I've drawn out exactly how that's done, guys. It's these intervals. Do you see how they're perfectly cloned? Perfectly cloned. Look at these, guys. All of these are they're perfect movements. It's almost a measured movement. I'll talk about a measured move. But when you talk about this is what technical analysis, this is what this program, Binance gave it to us. We're going to use it. We recreate previous kind of historic pricing actions, the previous interval in the next interval. Exactly. I mean, these are exact recreations from this low. We're going to create higher lows, higher lows, higher lows, higher lows. We're going to create highs, higher highs, higher highs. We kind of skip and dip through this, higher highs. You see how perfect this is? This is the essence of trading. This is the essence of understanding what you're doing in the market. The essence of identifying a trend and a beautiful accumulation strategy. Okay, so when I talk about you guys having blackjack, do you have blackjack? Well, I don't know. Let's talk about some different investment levels last night. Yeah. I believe it, it cruised to the upside. I can definitely see that happening early. Now, again, it may do this, it may do that, but I can definitely see it trying to break out early based upon, let's say, a frequency analysis, what we did, a period frequency analysis, the duration, the timing. And I talked about the fact that we had a kind of a falsified 45-cent interruption. That caused a stutter step here when it didn't need to. It respected this previous, for some reason, it wanted to respect this previous high of 45 from the 16th of April. It wanted to respect that for some reason, but it didn't fit within the interval basis here. Guys, it didn't necessarily fit within the interval basis here, okay? So that told me that it's kind of being restricted. It wanted to coil up, wham. And I talked about that last night. I talked about the need for it or kind of the expressed technicals that were telling me it was trying to coil up. Whew. I use that kind of like a spring coil example, like compression, like a spring compression. Every one of these is kind of like these retracements turns into like a spring compression. Now, laterally it can move. This one decided to move to the downside pretty aggressively into that 618 or that 78.6% retracement. So that is that was the flavor that we had on this, and it was up around here. I said, it could decide, and essentially, guys, we stopped streaming right here. I just tell you, we stopped streaming right here. Okay. I said, in terms of a consolidation, it could definitely consolidate. I also see, because of the reason and the fact that there's been kind of an artificial level, I'm going to call that 45. It was a threshold tolerance beforehand. Okay, guys, because you had gone up 70% essentially in that day. I was a part of this trade. Okay, I got in on the breakout of the bull pennant right here. Now, we publish those to our VIP guys. We talk about, right now I just want people to learn in that VIP section. I want them to learn and have, a database where they can always refer back to, okay, this is a bull pennant, irrespective of what it's on. I want people to learn like that. So I'm providing some kind of instructions to the VIP crew. They can provide some instruction to me too. I'm looking forward to that. But this breakout of this bull pennant, bam, to the upside. I was a part of that. Why was it a threshold? Because, again, we use our technicals, guys. We use our technicals. Wham. All right, that's essentially the price action from the previous frequency, from the previous zone pricing movement. And then we had essentially, again, on the breakout, and guys, this was the breakout. This is what you need to understand. From the breakout of the bull pennant here, this is what you're not going to necessarily get unless you're really paying attention. This was the pricing action here. On the breakout of the bull pennant from this previous one, and I'm talking current price action. You guys just pay attention. You'll learn when I'm talking about the threshold here and why we were going up last night. From this previous breakout on the bull pennant, this area of breakout was calculative based upon that level of breakout. All right? So that's what makes this highly predictable. Look, you're within just inches, guys. You're at 43.7 to 45 exactly, but that 45 was reached, but it was reached naturally. It was the threshold. You see how it was the threshold? You're like, yeah, now you understand. This threshold, this technical analysis gave you that percentage increase. So when you talk about the threshold here, I knew exactly the threshold. It was based upon the previous price movement. See? It's just right in line there. Okay? So that's what made that easy. That made that easy, guys. So that was kind of predetermined. That was kind of an excellent barrier to reach. That was the threshold. Okay. So in line with that threshold, we want to know whether or not, well, was that same barrier met here? No, it wasn't. Why? Because we reached this, right? And then we would expect kind of a retracement somewhere in along here. We would wait, hold on. We stopped at 45. We stopped at 45. Okay, we experienced a retracement in here, but we stopped short. We didn't necessarily have to stop short. It wasn't based upon a huge gain threshold in line with an overall, let's say, bull trend. The majority of the trend was compromised, I'd say compromised, by the fact that we fit into, okay, and what we got into, it's going to get a little bit complicated, as it hasn't already for some of us, right? But we started talking about more abbreviated time periods. Okay, so were we extending in terms of time periods and consolidation? So we were getting into a standpoint where we wanted to talk about these frequency intervals. One was 2 days. You guys remember that from last night? One was 2 days, and what was it? 5 hours? The other one was 1 day and 5 hour. You remember that? We talked about what is and that ruler will always help you measure this, guys. Yeah, we talked about this was about 2 days, and maybe, was it 2 days and 10 hours, right? My pups are going to start getting me out to go jogging. I got to go jogging here in a bit. But 2 days and 5 hours, 2 days and 10 hours. Then we had this one, which is about 2 days and 5 hours, something like that. We had this one down here. And what we did was a frequency analysis. I wanted to look at, all right, let's put the nuts and bolts together. How much time has been spent on these? 2 days, 5 hours, 2 days, this and that. When it starts to adjust a little bit, it's letting me know that something is kind of going on. All right. And this became a little bit more, I don't want to say more accelerated, but there were some reasons. If you guys watched the show from last night, just plug back into exactly the frequency analysis and that duration as to why I felt like we had achieved this 45 and we could have achieved something else more quickly. Okay, so something in excess of that 45. And the degree of retracement was nice. It was healthy. Let's say healthy. Let's get to this point. It was a healthy degree of retracement. Okay, in line with. And this is one of the things that will definitely get you as well. We saw that spring coil action. Here we see a retracement to 50%, okay, on the previous pricing interval. All right, 50%. All right, 50%. Here we see a retracement to, let's say, when this is where things start to stutter step. It starts to build and become more aggressive because you have a high, then you have another high. So you're building these in. It becomes difficult to just patently apply your Fibonacci's. But as we saw, essentially, as we saw kind of a period, and we did some sort of a period regression analysis. I don't want to get into the specific, guys, all the specifics, because it's just like a period regression analysis. We're talking about essentially building a bullish channel to the upside. We can discuss that very cleanly. As we see a heavy hitting retracement here, okay, that wants to spring coil up on something that's already very phenomenally, guys, bullish. We're expecting that because it's run into this artificially, it's not necessarily respected within the context. This 45 cents is not respected within the context of these recent price frequency, the frequency intervals or the pricing intervals. Okay, we wouldn't expect to just lay over and say, well, yeah, it's going to perfectly match back up to 45. Again, no, it's taken multiple steps, probably the easiest way. It's taken multiple steps with a little bit of variance in here to get us back to something that could look like 45 cents. So it doesn't fit within the pattern behavior as well. The video from last night, we covered it very well in the context of some other things. I have some pressing issue kind of right now in terms of this dialogue. I need to make sure you guys got that message. I'm sorry about that. Hey, Kenny Crypto, we want to shout out to you. It was a bad message in the chat, guys. Sorry for any distraction there. Kenny Crypto is a alpha trader along with Kent and Bianca. We know you guys are doing great. They're the ones that are beating the markets. They're focusing on beating the markets. As we look at, we're going to do kind of a derivative gain analysis, gain, G-A-I-N, profit analysis. That's what we do, guys. I derive from these previous pricing events how to trade this thing, okay? And yes, it's possible to beat the market, okay? Even if it's up 200%, you're like, well, why would you worry about that? It's a constant enjoyment of the market, okay, in terms of maximizing returns and minimizing your losses. Very simple. That's the goal. That's the standard. That's kind of the alpha standards. You guys want to know, I do spend time one-on-one in screens with other individuals. We have books to review. We have good stuff. And guys, I've been heavy on these books since like high school. People are reading Shakespeare. I'm reading Principles of Technical Analysis of the Commodities and Futures Market. All right, I've been involved in this for a long time. I enjoy it. It's what I enjoy doing. They don't teach this stuff at universities. I went to Duke University, okay? Graduated in 3 years. They don't teach technical analysis there. You can go to business school and not know anything about a Fibonacci, essentially, how to apply it or where it goes. Most of this it's kind of either self-training. A lot of it is self-training, okay? So I try and expedite that for people. In the VIP section, you guys are going to get a good dose of just kind of some classical I say textbook theory in terms of financial, what do you call it? Technical analysis is what it is. I have a financial background, guys, financial professional. And yeah, we'll bring up the Twitter. You guys can follow us on Twitter. We're The Kingdom. You guys can do that. We really enjoy this YouTube, the channel and the ability to interact with you guys. This new VIP club in the base camp is turning into something nice. You guys are seeing the phenomenal returns, and you're seeing the level of accuracy, guys, from our pricing target. The whole notion kind of justifies itself. This pricing target we exactly called this, guys. We've been calling all types of pricing targets, critical pricing targets, exits, critical pricing targets, threshold gains, exits, reaccumulation, all of these reaccumulations, guys. Every one of these green lines, I'm just going to draw this out because every one of these green lines, guys, is literally something that's being captured, okay, by who? By the people who are trading. All right, so it hiccuped here and it picked back up and it caught it. So you always do have to be prepared. Always be prepared, guys, for the notion that you may experience an event where it skips a level. That's what I'm prepared for. And that's what I like to always talk to you about. Just be prepared that it's going to skip a level. This was the fallout syndrome. This was everything falling out, right? The whole sky was falling. If you guys will remember that, Bitcoin was taking a plunge through its first level of Fibonacci. It retraced all the way down to its primary level of the 23.6. So that's when we had very cool, calm hands. I had very cool, calm hands, letting you guys know, here you go, right there, bam. 1948 is a good, was it 19, exactly the price, 19 in the mid-19 cents. Was a perfect little entrance, boom, boom. Just gave that to you, right? And sure enough, that held. And sure enough, you're up over 200% since that entry. But we're not hanging around for this whole 50%, diminishment in value. For those of you who held through, guys, you've got hands of steel. You've got those diamond hands we're talking about. I'd rather get involved with a strategy, to tell you the truth. I'd rather let a strategy work where I see a repeatability like this. I'd rather capitalize if we can make, there's a limited time to take advantage of a bull market. That's the one caveat. I'll give it to all you diamond hand guys. We love you, and you love us too, because we're marching in with cash, right? Yeah, we're the guys that march in with cash and kind of organize. Let's say we organize the software correctly to allow us to kind of behave in line with the market maker, because the market maker is going to the whole idea is buying and selling in a market. It's just you get in trouble if you can't buy or you can't sell. You guys know that from recently, from Robinhood, from Binance. If you can't buy or sell, you get into some problems. So at some point, it's nice to kind of try out your ability to buy and sell. I'll say that as well. It's great to hold. It's also very nice to try out your ability to participate in the market. Now, it requires some expertise. It requires maybe you guys watching some of our previous videos. But this last night, we called this, guys. We called this in terms of I could definitely see, I threw up these kind of heavier figures than normal, guys, and applying it without too much of a context of, always having cash down below. Do be prepared for it to skip down a level. Always be prepared for negative price action. You have to, guys. You have to. Or a protective stop loss can go in. If you're dealing with a very, very aggressive bull market, you start to bring up terms like protective stop loss. Okay? So as we're looking at this now, this was the highway that I had constructed from last night, guys. I did that. It kind of looks like a highway. If you look at these lines here, I like these lines. They're nice. As we pull this up, they're just nice lines. I like to think of things in terms that I can kind of understand them a little bit better. We need to get up on the other side of the road, right? Now, guys, these are our lines. These are my lines. Okay, look what's happened. You see this first stutter step right in here. Okay, this first kind of barrier, this level of resistance or this pause. Perfectly on, and these guys, this has been here since last night. You guys know we turn off the computer, we talk about it potentially going up, then bam, it's up. Well, it stutter steps along the first level, right? Yeah. Now, some of you guys, the alarm is going off. Okay? Some of you, the alarm is going off. We're down off the highs. We've reached in around the 55. It touched in around to 55. And look, now we're back in. We're going to prove some candle work, right? We're going to prove up some candle work. In and around, it looks like, bam, look, guys. Look at that second level of resistance. That's phenomenal, okay? This was a first layer where people could have capitalized on a trade. Okay, you wonder, well, why would I draw those highways there? That's just kind of the first level where people could have capitalized on a trade. Okay, I drew that up last night. So as you look at things, that's kind of the first level where it stutter steps, this and that. It's going to need to get through this. That's also, if you hit a point of resistance, the definition of a support, let me tell you this. Definition of a support, a good definition is something's going to strike it and it's going to go up. Okay, a resistance, a good definition of resistance that you can understand, it's going to strike it and it's going to go down. Okay, in the context of that, you're going to have the ability to profit. Okay, either through not being involved in a negative price action until, bam, you hit that resistance and you recognize the positive price action when it goes up, even if just briefly. Or you're able to identify the resistance ahead of time, and that resistance, okay, you're a part of until it hits that, and you disengage and you want to re-engage at a different level. You get into some micro trading. You want to talk about day trading, guys. It gets intense. This is mild stuff. This is mild, okay? Because you're gonna be like, well, what did you base these on? What did you come up with? What exactly is your technique, etc. Just enjoy the data right now. Just enjoy the data. Enjoy the fact that I brought this up to you last night. The specified reasons, okay? Exactly. Enjoy the data. You can go back and watch. No one's going to question at all that I had these highways up. Essentially, these lines. These are my lanes. These are my trading lanes, guys. I put those up for you. You can look back at those. What do? Each one was kind of like a resistance opportunity to re-engage and make more money, because people want to know. I know the question is, well, you can't tell me amidst the appreciation of 200% that you can beat 200%. Well, I'll tell you. Why did it meet both of these, and why did it stutter step here and provide for an opportunity for profit? Well, I don't know. It's just, and again, we're going to have to get into some different dynamics. Okay, in terms of how do you really profit off of those levels? Are they exit points? Are they re-entry points? Are they opportunities for people who aren't involved in the market to go ahead and enter into the market? Okay, when you're looking at something that is this hot, those are the questions that really start to frame. People are watching and they're like, well, okay, does that mean I can get in at these levels? Okay, well, if you did, if you decided to get in at this level, I wouldn't have recommended it because, and first of all, I'm not going to advise on anything, but I would advise a former commander-in-chief. That's always one thing, because I always have to, everyone qualifies, this is not financial advice. And I'm like, I advise the President of the United States. So for me, it's kind of, it's entertaining for me to have to continually say, this is not advice. I'm like, I've advised the President. So anyway, that's just the truth, guys. I've got my credentials and all that good stuff from that experience. It was a great experience. I really enjoyed it. Looking forward to being of continued service to my country through just an absolute volunteer position, just being of service in whatever capacity I can. I enjoy doing that kind of stuff. I enjoy this channel, being of service to you guys. If I can bring up this level of resistance, this stutter step, this highway up here, these are trading lanes, all right? So people will want to know, well, how did you determine them? We'll get into how I determine them. I move them up, and they represent some functional. You're like, functional levels of what? It is like it's 48.5. I spoke with the alpha trader last night. He wants to know, what is that 48.5? And now he's kind of seeing that's what that is. I spoke with the alpha trader last night. That's an alpha trader in our group on the Discord, etc. That is, that's doing a great job. And let me go ahead and Kenny, I appreciate you doing some work on the removal. You guys keep it respectful. Keep it respectful in these specific chats. I want you guys to keep it respectful. If I take a little break here, it's because I'm seeing that some things are being, guys, if you have a problem and you're getting deleted at all, these buy now and sell May 8th, guess what, guys? You are getting removed. You are not getting reported. You are getting removed from here. So you guys want to get in and jocular around or get this and that, or start giving people exact buy dates and signals and prices. You don't belong here. That's just it. Okay? You do not belong here. We're going to put, you're getting reported to YouTube, and I'm reporting you. So I'm keeping this a clean place to be. You guys that want to get in here and on a technical channel, you want to involve yourself. No, we don't do take advantage of crowds and people who are chatting and a part of a good community. We just don't do it. So I appreciate our moderators right now doing a great job. You guys are getting removed. You're getting reported to YouTube. This content has been approved, okay? This channel has been approved by YouTube. I'm not making misrepresentations in terms of who I am or what my background is. When I tell you that I was the lead analyst on a $1 billion equity fund, we were across the table from Harvard. When I tell you that, guys, that's the truth. All right. When I tell you I was an advisor to the President of the United States, that's the truth. This content's been approved. Now, they haven't done a credential check on me. They're welcome to at any point in time. I'm happy to do that with them, but I think they understand the nature of kind of the education that's in play here. And it's just it's a pleasure to be on YouTube. We very much value this. We very much value this. So let's talk about the price action. Let's return to the price action. Okay, and as I've removed a few people, they've gone out. Hey, Soho Trader, what's up, brother? We got Soho Trader, who is now a VIP. What's up, Soho? Loving that New York style. What's up, flavor in the New York City? You understand this stuff? Yeah, we got New York in the house now. New VIP member. You're gonna love this. We're gonna be happy to have you as well. Yeah, he just made a commitment into the VIP restricted zone, guys. That's one of the join options you have there. The opportunity to join into the kind of the club that we've got, the VIP club. And guys, we wouldn't put it together unless it's been, the information has been phenomenally valuable to people that are kind of on that inside track. Now, people want to know, well, what are you getting if you're not on the inside track? Well, I'll tell you what, I put an effort to make sure that people on the inside track get the key information at the key times. So that's kind of the history of, I'm talking about like amidst a breakdown and a crash down, people want the perfect, they want the perfect entry. All right, here, bam, there you go. All right, bam. While everything's falling from the sky, bam, there you go. All right. Now this coordinated kind of level attack in terms of the price action. How do we trade? How do we achieve alpha? Right. Now, there's some of the terms we're going to be going through. Some of the ideas that our alpha traders are going to be bringing to the group. We discussed this 48 last night. What's this 48? Me and an alpha trader. There's guys going through heavy sessions. Okay. Heavy technical sessions and really trying to achieve alpha. Alpha is the percentage by which you beat the market. Okay, the percentage by which you beat the market. And I'm talking if the market over the last 10 days is up 200%. That's fine. That's fine. Clearly, there are opportunities to do better than 200%. And you would think, well, why would we have to go to all that trouble? Why would you want to find something that's going up 3x instead of 2x? If you have the option over 10 days, do you want to go 2x or you want to go 3x? Everyone's going to choose 3x. Everyone is. That's just the way it works. So if you have the opportunity to easily apply a strategy or a pattern and achieve a 3x instead of a 2x, you're going to do that. So it requires a lot of, I'll say, on the macro scale, let's just take a step back before we get real complicated. But you see these layovers, these perfect layovers of these pricing intervals? Guys, those are clone copies. Every one of these is exactly the same. I can literally just draw this over here and it disappears. It's the same, guys. It's the same pattern being, purely applied. Our goal is to identify it and to capture gain on it in excess of the market. Okay. First of all, to identify it so that people can be assisted in, let's say, getting in. Like if people want to get in on the price action, you want to know, like, yeah, you're welcome aboard, right? Or whoa, we're going through this is all the tray tables in a full upright position. All your seat belts, please be fast. Yeah, this is one. No, there's the doors are closed. The doors have been sealed. As opposed to, well, we're now boarding. Okay, you understand the difference? One is like locked down. We're on the jet tarmac taking off. The other one, and let's say one is we are in flight. No additional passengers, right? No additional passengers. Nice company, by the way. Huh? Nice company. Love that. Citation 10. You guys check out that jet. Citation 10. Shoo, fastest jet, civilian jet on the planet. You will have momentum when you just get out of that thing. You will feel like you are still rolling. Okay, you feel like you're still just you're still going 600 miles an hour. So if you guys like to go 600 miles an hour around the planet, enjoy that. We want to just give another shout out to Soho. Soho, you are in the right place. Definitely Soho, and it's nice to have you here. You guys keep an eye on Soho, community leader VIP. All right, I like that name too. You're very into trading. I'm glad that the algorithm found us this morning. I invite you to look at last night. You don't have to, Soho. Last night we called this in terms of the early breakout. We turned off right here. Okay, we turned off literally, and we're doing this all the time. Literally right here. Bam, we called this. Well, it could just, it decide to go ahead instead of consolidating. I wouldn't be surprised at all if it decides to go to the upside. We talked about some heavier levels of investment than what we may normally talk about, just without too much context, was about, let's say 5,400, 1,800. That's a lot for some people, okay? I don't know if you're dealing with accounts with $1 million. It's a little bit reasonable, and that's not, that's just my opinion. I'd like to hear your opinions. It's not management advice. It's not we're not doing financial planning around a single frequency interval on Dogecoin, guys. That's just not what's happening here. That'll never be happening on this channel. But yeah, in and around this, Soho, just to update you, we called this kind of breakout and said, well, I could see due to a frequency basis, the frequency analysis, the duration analysis that we had completed, I saw that this could go to the upside very, very easily. And I just say that the risk analysis, so we did kind of a cost benefit analysis. The risk was very low on this one. So I engaged kind of a strategy with some heavy amounts of cash. Okay, the heavier amounts of cash. And yeah, we're glad that we did, because we woke up, we stopped streaming right here, guys. And literally we stopped streaming. We turn off the computer, relax, just, decide to rest for a minute. I always tell people, eat well, sleep well. All right, take care of those relationships also that you were involved in before you got involved in the market. Okay, because this can be an all-consuming. Soho will preach it to you. I guarantee you. In Manhattan and the whole Wall Street crew will preach it to you. Now look what we have, guys. Now this is a beautiful picture. You should literally screenshot this, guys. I'm gonna screenshot this, because why? This one right here. This is our highways, and you guys just check that out. Look at this one. I'm gonna go back here. I had to screenshot that, okay, just so you understand why. Because look at those highways at work. Everybody's like, you got to be kidding me. No, I'm not kidding you. All right. Now look at these highways. These are our trading lanes, right? It's gonna try and hold on to that, huh? But I got that picture. That's beautiful. Okay. Soho, you're in VIP. You want to know kind of what we do on the regular? This is kind of what we do on the regular. We really try and reinforce this. If you're into this line of trading, beautiful. I love it. Okay, I love it. Any of you alpha traders, all you guys at base camp, all you moderators, we'll give a shout out to everyone from Australia on to China, over to Russia, okay, Malaysia. We got a good group, guys. We have a real good group of solid traders. Dubai, we got Middle East, we've got Canada, real strong. We got Texas, California, Florida. We got all kinds of things. You guys drop in the comment section where you're from. Let each other know where you are from. Amen. Brother Soho says he loves the intense and deep technical analysis. That's why he joined. You got it, brother. It's not for everybody. Yeah, it's just not for everybody. It's just, I mean, you guys understand, you look into like a boiler room or a Wall Street movie, it can be exciting to watch for a couple hours, like, wow, that's what they do. But when you're, when you're, essentially into that when you're into that potential frenzy, and it's not you. The trick is never for it to be you. You never feel like you're a part of the frenzy, but at least you're trying to guide people in a quick manner. Seconds count, minutes count, right? Hours definitely count, days definitely count, right? Plugging people into the right strategy to where they can take advantage of something. It just becomes, it's funny, the presentation style changes a little differently. There's a lot of information to present very quickly, and you assume, and it's not a I would say it's not a what would we say? It's not a presumptive. It's not a presumptive conclusion that you guys would understand the deeper technicals, because you're a very intelligent crowd. And the more I talk with you guys, I understand what you're capable of. There's a reason that you're involved in and around the channel. So Soho is a great example of that. Okay, and I tell you, you guys got that screenshot. Like, no way, yes way. When I'm telling you guys, when we hit that prior pricing target, and you guys need to know right now, when we hit the prior pricing target, this is not a joke. I'm not telling you, oh, we hit our target. No, I'm telling you, specified beforehand. Like, these trading lanes were up since last night. Since last night, and look at them hold. Look at the stutter step in around here. Look at this up in here. Bam! With that level of precision, guys. I mean, literally, clearly defining your price action to the tune of, I don't know anybody else, okay, on the YouTube space that's doing this well. I just don't know. And I thank God. And I thank God we're having that level of precision, okay? Not to get spiritual at all, just thank God. Thank goodness and thank God. We are hitting our targets, right? There's nothing wrong with saying that. We got some decent ways to communicate in general, like glory be, whatever. I don't know what you guys want to say. To the moon. You guys say to the moon. Let's just say to the moon. But as we start talking about these different price actions, the repeatability of it, kind of the essential nature of hitting our targets. All right, I'm talking about hitting this target ahead of time. As sure as we just hit these trading lanes, stutter step here. Now we're trying to hold over the trading lane. People wonder what the heck, why are these here? They're here because I put them there, guys. They have a calculative event. If I get into kind of the derivative analysis on it, it's going to be a little bit much, all right? I can talk to you right now about what's important on the strategy and the technicals. I can get through those details. If I get into a derivative equation, you're going to tune out. I just know you will. I know you will. So I don't want that to occur. I'd rather keep some things not quiet, but I want you to understand that the work is being done on the other side of the coin here. So you guys understand the expertise being applied. Again, look at these low to high. Okay, since we hit our target, bam, and we held at this target. As you see this hold over the top portion here, that's one of the reasons I'll bring this up. As you see this try and hold at the top line of that trading lane, okay, as it's trying to hold exactly on the top line of this trading lane, bam, right? Yeah, okay. As it's trying to hold there, it essentially held that same line right down here at our target. Bam, it decided, okay, we're going to hold. We're going to hold. London gave a figure. I didn't give the figure. TradingView gave the figure, guys. But we had some crosshairs. So let's just say some crosshairs we had to work through in terms of having the scalpel out. This one was one more like a sniper rifle. We had the crosshairs. We were looking at this one. We're targeting this up. Bam, we're in, and it held. It was bullseye. Bam, amidst some heavy price action. Some heavy price action. So since that time, you see the repeatability function of the technicals. Beautiful. This repeats one time. Great. We're ready to profit. Definitely from the golden pocket, the 61.8, right, to the 65% retracement. That's from the initiation of the price trend. Guys, from the initiation of the price trend, the price movement up. That's how we draw these. From the initiation of the price trend, or the price action, let's say. Initiation or the trend, the overall trend that develops in terms of that initiation of the price action to the high. That's going to give us the parameters after which it's going to want to retrace naturally. Retracing to that golden pocket, and then we initiate. Essentially, that's where we have larger amounts of cash waiting. It's just a function of the economics of a market. At lower prices, guys, you're going to have more demand. People who throw more demand in up at higher prices, you're contravening the whole idea of a market, guys. And a lot of you have business education, etc. You understand you can't demand more at a higher price. You just can't. In the context of a trend, maybe, and that's something that can catch people up. But I just say on the whole, particularly as you look at anything like Elliott waves, I don't want to mention too much, Elliott waves in here, repeatability, double top, you're going to get into the position where, like, yes, based upon those, you're all going to agree that is correct. You don't want to throw an incredible amount of money or high amounts of money, larger amounts of cash at high levels than you would lower levels. This is a perfect setup. We saw this repeated through a lot, and this was a good effect where we just saw one after another kind of hit. The question becomes, where do you want your money to go to work? So that's something I look forward to hearing from you guys, because there's a lot of opportunities to hit golden pockets, right? We like to do research on those and kind of line them up, right? We like to line those golden pockets up if we can, back to back, hit 50%, 50%. So you get into that question very quickly, what you want, what you would like to occur. So these are our trading lanes. They have been accomplished. Since last night, we did talk about heavier amounts of cash involved than just what was typical. With the understanding and the clear denotion. Yesterday, the VIP group got from me, nothing can stop Doge, okay? I don't normally say all of that to an internal group, but, I guess it worked out, guys. if you threw something in, I guess you've done okay, huh? That was just an internal, on the backside of the community. I'm able to give private streams, exclusive streams, and to give that information on posts directly through YouTube. So it's a nice environment. I know it's regulated. I know we can report people, if there's any bad conduct. So it's a professional environment where, I think you guys just paid for the VIP, maybe the whole year of the VIP. All right, maybe you paid for the whole year of the VIP with one trade from last night. If you did that and you didn't know if it was going to go down, if it reached this threshold, anything else, that's beautiful, guys. That's literally that's gorgeous, huh? That's exactly what we want to occur, and that's the type of information we want to bring you. We don't want to just bring it to you one time. That would be inconsistent with how consistent we've been, because we've been this consistent. As we're looking at being up over 200% since our trade, okay, since our entry spot and around the golden pocket. We entered at the golden pocket. I don't hear people saying we got in at the golden pocket, 200%, right? About 188%. I don't hear that all the time. I don't hear people saying, well, we calculated this, 8,000 people saw our video and exactly met the 50% threshold, the 50% retracement. And that was a 70% trade there, guys. I don't hear other people saying that. So I know you guys are more technical because you're inclined to that. It's not just, we're at 50 cents, we're going to $1. No, it's at, We're interested in the market. We want to even, guys. We want to be able and ensure that we're able to buy and sell in the market. Even at smaller amounts, if you hold a percentage, if you hold a large percentage, we still would like to engage, to understand that we're able to trade, to functionally trade this. Elon Musk just recently did that. You guys recall that with the sales on his Bitcoin. He wanted to test the liquidity of it, right? You guys have had some big jobs. I know a lot of you in major companies, corporations, etc. As you start leveraging more of your cash on the specific exchange you're in, you want to know if there's going to be a hiccup. You might want to know if you've got 50 grand in, or if you have 5 grand, or you have 500, or you have 5 million. You'd like to know at different levels along the way when your setup might change a little bit. Okay, when you might be tested in terms of liquidity. Those are important things to determine. So you may want to do some of those tests along the way. That's kind of again kind of level of insight that I would maybe kind of share in terms of how we're able to communicate and what all we're able to discuss. I'd say. Now, let's look at, I'd say, with the VIP zone, et cetera. So we appreciate Soho. Just one more shout out to Soho. And also shout out to Lars. Shout out to Kent. Shout out to Matt, Jellica, and Bent Frog. You guys, I literally think you just paid for your VIP membership. And I'm glad you got in, huh? I'm glad you already got in, because yesterday it was just literally a private message from me to them. Nothing can stop it. Okay? It's just nothing can stop Doge. Like, get in on the Doge right now. So that was nice. Not advice, it was nice. Let's just say that. Looking up towards this, what's also nice, guys, you are seeing the push through our trading lanes. You saw the stutter step along the original one. Now, what did you see here? Another opportunity to what? To profit. Okay. And now this is a tricky one, because it surpassed here quite a bit. So that's a nice trade. I like the fact that it's almost equal on both sides. We can get into the kind of the differentials and apply a little bit of an extension versus a retracement, kind of what was going on. But this is what we like, right in about here, guys. It's going to show that as and it's just off. Don't tell me it's off at all, because I don't want it to come back on and then back off. I won't even mention that, guys. I won't even do the calculatives. This may be within a margin of a slight. I'm not going to say any kind of an error. If you hit this one right on, you're going to probably hit this one right on, but you're going to compromise between essentially your upside projections. Okay, your higher projections. You're going to compromise between that. If you're lower here, you may wind up a little bit more conservative at the higher levels. Okay, and you guys who know Fibonacci extensions, etc., you kind of know what I'm talking about. I don't want to get into too much of that, with the understanding that everything's calculated, but I've made some aggressive, I'd say some adjustments in terms of where the market is moving, and why I've decided to kind of involve discussions of heavier amounts of cash being involved at this lower level. For you who involve the heavier amounts of cash, okay, per discussions even last night or beforehand, guys, we were talking about heavier amounts of cash for a while on Dogecoin. Just as a hypothetical, just to say, hey, if you were going to throw in heavier amounts of cash here, bam. So those of you who are holding since then, you are happy, okay? You're happy campers. We're happy to have you here. Phenomenal job by you guys. We come up with a pricing target. What's a pricing target? That's me saying at this price, let's say it's currently at, if it were currently, I don't want to mention the current prices, but in the previous, there's a reason for that, guys. I don't want to talk this bad boy down at all. I want this to run. Now, we brought up a previous pricing interval. What if the price were 44 cents? A pricing target is me saying I want to buy at 40. It's at 44 cents. I want to put a large order in for 40. I want to see if the market maker will come down and pick me up. I want to go up. But I'm going to put my price. I'm going to put my target pricing in here based upon my Fibonacci's, based upon retracements. I'm out. Space Ranger last night was out. He said he called this perfectly. We know he did. He's a good member of the community. Always supports. Okay. When he talks about being out at the top of the zone, top of the, he perfectly hit the peak here. He's out. We draw in, and guys, real quickly. Like, what do? We know we have, okay, great, we're out. We have a retracement in process, right? No problem. Let's hammer up some retracement levels. 42, okay, it's going to be 42 cents. It's going to be 40 cents. It's going to be 41 cents. It's going to be 40 cents. It's going to be 39 cents. Then I have my predetermined levels of investment, okay, that I'm comfortable with. Not you, me, that I would say for me I'm comfortable with. Okay, and it may be $100, it may be $1,000, it may be at the bottom at this different level. But I've written down these levels that are automatically generated very quickly by the Fibonacci. And then I have next to it already, I have 100, 200, 600, 1,800, 5,400. It may be 1,000, and it may be 54,000. Okay, it may be 10,000, and it may be 54 million. Okay, If it's 10,000, that would be an extra 2 zeros. So it'd be, it's going to be 540,000. All right, be 540,000. So those are the types of quick decisions that are made with limit orders purchased or limit orders submitted to the exchange that are made within a matter of minutes, guys. That's it. These are automatically calculated. That's the beauty of what this enables you to do. It's trading view. It immediately comes up with your retracement figures within a matter of seconds, guys. Bam. We draw this in a matter of seconds. You guys get that? We see a retracement in progress. Beautiful. Let's draw something up. Bam. We got our targets. Is it going to be perfect for you? Learn how to draw your Fibonacci's. We can help you out with that, okay? We help a lot of people out with that. But learn what that means. Immediately you have your pricing targets. And then if you've got a predetermined level, and I tell people do your own calculations, because as you have your own, you're able to enter your limit orders very quickly. You'll notice this matches up very well, right? Yeah, you're able to enter in your strategies very quickly. They all just match up. Heavier weight on the downside, in line with the demand curve. As the prices are cheaper, exactly, as it retraces over here, look, as the price goes down, we're going to have more demand. We want to achieve a better cost basis, okay? A better price per coin. Okay, we want to buy more at a cheaper price. That's how we maximize our return. And some of you may decide, you may do your own analysis and say, you know what, London, I like what you're trying to do. I just love the golden pocket. That's it. I just like one investment. It's going to be 10 grand or it's going to be 5 or it's going to be 100 or whatever it is. And I'm just going to play these golden pockets. That's it. Well, you have to know how to set this up. You have to be able to put in the golden pocket, build that into the template of TradingView. It's not always just necessarily easy, but you may just want to draw these. Well, great. I'm going to flip this over, and immediately within 10 seconds, I'm going to have the 61.8 to the 65%. I know that's the golden ratio. Sure enough, bam, right on it. See that? Okay. Some people may just want to trade the golden pockets. It may not always hit the golden pocket. If it's really aggressive, okay, and it is steady and aggressive, you may just hit to a 23% retracement, okay? If it's wanting to recoil like it recoiled yesterday, and this was kind of a deep dig into the pricing action, amidst a lot of positive sentiment, amidst a very bullish sentiment, okay, and that sentiment is going through the roof now. So we talked about that last night. That's the strategy behind things, okay? So the strategy behind things, you're up 35%, guys, from this pricing target entry here. Now, I just tell you, we discussed that in and around here, okay? We discussed that for a lot of people as it was going up. I'm not sure, during the show, during the program, people could have been purchasing. And it's essentially a pretty sophisticated crowd that's here. I think you guys could have been purchasing during that, and just talking about the fact we believe it could go up instead of consolidating. It would be likely, because it was kind of like a compressed, and I don't want to just say like a spring coil on the way down. It's retracted into the coil mechanism, and bam, it wants to fly up. It did that. But as we also look at it, it's kind of like we were abbreviated or pushed back in time also. From this, let's say in multiple ways, okay? Both from the top, that would be that spring coil just down, bam, it's essentially getting pushed down by that 45 all-time high, which again, didn't necessarily have to be respected, guys, because that was let's say a cross indication. When I bring up a cross indication, that means is that as I'm looking at the candlesticks, I'm seeing a drop in price. Okay, if I look at the line chart, you guys pay attention real quickly. You see a drop in price there. Now, if I'm looking at the actual line chart, oh, it's a completely different situation. It's a rise in price. Oh, I see. So there's a cross indication there, okay? We're being given kind of two sets of data to work with. All right, so that didn't necessarily have to be respected. This level of 45 did not necessarily have to be respected. It's off the chart, literally, if you look at the line chart. So understand that's how I kind of compute into the fact, and I kind of recognize the fact it didn't necessarily have to be respected. Psychologically, it was already presented. It presents an issue, let's say, because psychologically people have already sold at that level. They've already sold at that level, and they were able to reaccumulate and enter into a phenomenal trade based upon our pricing targets, and just kind of I'd say a retracement level, a good retracement level. If you were able to draw out your hey, Jeff Arnett, look at that, worked perfectly for him. That's great to hear. Well, we have a lot of great stories, Jeff. It's great to hear your success story. We have a lot of them. A lot of people will, either DM me or they'll get involved with the different chat, etc. We'll start hearing some great things back in the VIP rooms. So, but people have already capitalized out, and guys, this was just very calculable in terms of where this was going to move. Shout out to Jeff, guys. We want to shout out to Jeff because it worked for him. That's exactly right. We're getting a lot of confirmation in terms of the crew. Last night was Space Ranger perfectly getting out at the top of the peak or the apex of the price action. This previous price action, when you talk about the psychology, people have already been at 45, then they've gone down, they've reacquired, and they made 70%. So they made 70%, then within a period of days, that was the original price action here, up to 45. Then they got out, they got back in at our pricing target, exactly, guys. Then they got in at our pricing target, they made another 70%. We were live this whole time. This was a long stream. There's a 5 or 6 hour stream in there. We were literally there, and I heard it. There was someone watching TV somewhere. I heard a coach blow a football whistle. I was like, okay, the coach has blown the football. He's blown the whistle. We need to get off the football field because we can trade these things. We can generate, and you guys know that, huh? We can walk this sucker up. We can continue to, look through these pricing dynamics, and continue to work them. We can continue to. It's just at some point you get tired. Last night I was so exhausted, but I had to get the information to you because it looks so bullish. Like we got our trading lanes up, we got different stuff going on. I see, kind of an abbreviation. I just wouldn't be surprised at all. I'm not going to tell you this needs to happen. You guys need to do this. That's not the style here. You guys are very intelligent people. So it's nice to hear from Jeff. Thank you for the support and the shout out. Your community thanks you, by the way, because you're able to do this. And as people watch this stream live here, and it's just a confirmation of the process. Some people have been around for a longer period of time in the community. For those of you who are new, welcome. It's great to have you. And there's a reason that we are here. We're not exactly the largest group. We don't advertise. We don't do. Not a lot of, like sometimes, what is it, like, not to be mean at all, I just thought of this, but like kids will throw a tantrum sometimes. They get a lot of attention by running around and screaming and doing different things, right? Yeah. Okay, they'll get kind of into this tantrum effect, and we don't do that. We don't run around and kick and scream and do all that stuff on TV. We're not into that. We're into like kind of the more sophisticated, professional kind of level of investment, kind of, let's talk professionally about what we can learn. And I don't diss anybody. There's a time for everything. They say that there's a time for everything. And some of those channels they're very entertaining. I don't want to be entertained. I don't want to be entertained. I want to capitalize on my trades. That's just what I want to do. It's nice to hear something's going to the moon. Okay, great. It is. When it goes to the moon, excuse me. We got all kinds of weather blowing in Texas as usual. I miss Marbella. Have you guys ever been to Marbella? I miss Marbella. Had a place in Mexico last year, and a nice 3-story house in Mexico on the beach. And we had all this incredible, not sure what's really going on kind of stuff happening. So as we talk about world dynamics, I bring up this. You guys may enjoy one of these. Some of you are making good money. These require a lot of gas. All right, and a good pilot. Okay, I'll tell you that. Citation 10 is your best bet. If we're talking to the dog, he's gonna be like, "Yep, Citation 10, fastest civilian jet on the planet." You guys enjoyed that. He is cool and smoking. We brought him up last night because essentially, guys, I brought it to our VIP crew yesterday. Nothing can stop Doge. All right, nothing. It's unstoppable right now. So you guys have proven that with your trades. I'm glad you guys are making money on Doge. And shout out to Bond. What's up, Oz? Shout out to Red Raider. What's up? Infidelity. It's Fidelity. I'll say Fidelity or Infidel. The battle game has been around and given us some pointers on tech. Shout out to you guys. And definitely to our VIP members, guys. From Lars to Kent to Matt to Jellica to Bent Frog to Soho is in the house. We are happy to have Soho. We need a New York contingent. New York is like my, I always kind of, I got to tell you, that's my place. I feel right at home in New York. I always have. I like people in the street. I like the heavy hitters. I just, in terms of the big business guys, I just feel comfortable with them. I always have. So guys, we're just pushing to new heights. We're pushing to new heights, and it's exactly like, look, a lot of people say exactly as you did such and such. I'm just going to tell you, look at our trading lanes. These are beautiful trading lanes, huh? I mean, look at that stuff, huh? That's okay, guys. That's you see we drew these out last night. We talked about the ability of it to go up, right? Yeah, do you think? I think we know what we're doing here, guys. Check it out. We talked about some healthy levels of investment, it not having to go through a sideways consolidation. You guys can fact check this if you want to. I welcome you to fact check it. I want you to, because you'll become a VIP member and you'll hang out and we'll spend more time with you, and I'll be able to be of more service to you. That's one thing I like about VIP. Like when you join a club, something like that, you're convinced. You want to be treated well. You need to know is the truth. I appreciate you guys very, very much. I really do. That's why I do it. Sometimes you'll see there's only 200 people watching, or only 150, or there's, sometimes, well, there's 500 people. People watch when things crash. They really want to know what I'm saying when things crash, and it's good. Why? Because when things were crashing, guys, we had, some of our biggest viewers, number of viewers who did what? Who picked up on our pricing target. But I kind of feel like they don't want to take advantage of the trading in the meantime. For some, you just want a pricing target, man. You got to trade this thing. You got to get your alpha together. And the alpha group's kind of a select group. The VIP is kind of a select group. It's not everybody who's able to internalize this information. So those of you who are, great. We put up these trading lanes last night. We published to our VIP group that Doge is unstoppable, right? It ran into that invisible wall. Then we had the, I did bring that up. I think the 45. Then we had last night's stream talking about, we could just see this thing going up. We could see it going up. We talked about some different levels of investment. We drew these out, had great discussions with people who had timed it perfectly. And then we went to bed. We turned off our computer right here. You guys will love this. I turned my computer off. I was just so tired. I was like, I have got to go and get some sleep. I tell everyone all the time, eat well, sleep well. I got that advice from a really good guy. Eat well, sleep well. He's from Sicily. Good guy. And pretty powerful dude. He's a good guy. He's a good dude. So as we look at that, I turned my computer off right here, and what happened? Bam! Just like absolutely through our trading lanes. Like, I'm glad I took a nap. You guys take another nap now. Go on, London. Go take another nap right now. Anyway, that's funny. But that is the case. I don't want to adjust those trading lanes. So we have conquered back through this. We are not surprised. That's in line with the diagnostics that we have here. Now, I could have achieved them a little bit later. The important thing is that you got some kind of aggressive calls from me. And now this is a big deal. A lot of people will tell you one thing or another or something else. They may see this going into, a different kind of situation. This is a huge, possibility, I guess. But it's, at the same time, just, be very careful. Be sternly warned. I'm like, okay, look, if you see the technicals pointing you in the right direction, you just don't need to yell fire just because there's a level of resistance. And in fact, what we talked about last time was a spring coil, wham, trajectory, right? That spring coil action that was thrown into the mix there. So congratulations, everyone who watched last night. For those of you who are making money and involved, and those of you who are taking advantage of our technical acumen, our technical skills as we would apply them, because they're treating you extremely well. Look at this in terms of our trading highways that we set up. This right here, beautiful. Look at that. Nice little stutter step, nice little price action, even in the mid lane, right? Beautiful, guys. Look at this right in here. And it's not just everywhere. It's around that trading lane. Beautiful. Okay, that kind of mid-level stripe. Boom. And notice it's a little offset, right? It's a little offset. As we get into the next kind of lane, that next line of, we'll say resistance support, 48 cents. Look at that. Beautiful, beautiful action along that line. As we look at this, guys, look at this. These are from last night, guys. I didn't move them. None of this price action was here. You guys know that. That's how accurate we are here. Okay, look at this. Perfect. Look at that, perfect. That's just perfection, guys. You see the action in and around this. From candle to candle. So we're getting into durations. We're getting into a duration, not only a price amount, the amount of the price action. We're getting into a duration analysis. You see on the cut over from one candle to the next, from 1 hour to the next, there's not another channel, guys, that's doing this. There's not another channel that's literally giving like a frequency intervals on a periodic timing basis. Yeah. Why do I? Well, because when they're switching over, the hourly candles are forming a new candle. Look at that, guys. Boom. That's precision, guys. All right, that's the stuff you're not going to be able to find anywhere else. I mean, I'm just gonna, you guys know that as a matter of fact, everyone realizes that it's not just the amount of the price, it's the 1 hour period interval at which this is occurring. Whoa, yeah, that will change everyone's viewpoint of what just occurred here. That reframes your entire mind in terms of what this actually is. You know, talk about like a good little chat pre VIP or with VIP. Yeah, you guys get that now, big time. I'm dealing with the frequency, with the period analysis. You guys see that? These are hitting on the period, essentially on the rollovers to the next candle. Rollover to the next candle. There's period frequency in here. Rollover to the next candle on this. And by this, I'm referring to this teal line, this green line, then this yellow line, then this teal line, then this yellow line. Okay? That's the dotted line. We have to break through that. Then this yellow line. These were put in last night by me. I'm discussing it with an alpha trader. I'm kind of like, don't want to get into all the, guys, it's extraordinarily complex. It's very complex. I took advanced linear calculus when I was at Duke, my first year, like graduate level, master's level, advanced linear calculus. So I have a mind for this. And yo, David, sweet, what's up, brother? Nice entry into the VIP zone, exclusive restricted VIP zone. David is in. We have a lot of people getting in. This is the type of information, guys, that you're going to realize this is what is going to keep you in, okay? This is the type of information that's hugely critical. So, David, everybody welcome David. I'm putting his name down. We got Soho today. We got David. All right, just phenomenal news. You guys see the value now. I know you do. You see this, the frequency. You have to be able to understand this to be able to appreciate it. It's not easy to understand. I'm talking about in very frank terms here. As we look at the price action go through the roof, beautiful. Who got in at the right levels? It's not just what you want to invest in. It's did you get involved in at the right levels? At what price did you get involved in? That's what we talked about last night here. All right, bigger amounts of cash involved in here on the retracements. Then I had these drawn up. I had these trading lanes drawn up. Beautiful, guys. Why? Because you're seeing in the hourly basis, and it's always, the timing is the most difficult thing in the world for people to get down. It's kind of like, it's just the timing is extraordinarily difficult. You guys know you can be an expert. I'm going to put down David here. David Sweet, right? Yeah, David Sweet is in the house. Very nice. You guys look at that VIP membership. We have the invitation on top for a reason, because it's an exclusive club. David, you're going to get a card designed, a VIP card designed by the girl who did the the logo work for the U.S. Open, the professional tennis match, the world-renowned professional tennis match. We're going to, I've engaged her services again. She's worked great, very well in the past for some businesses that I've had, doing some logo work, etc. So the U.S. Open, she is going to do a VIP card for us. I want you guys to have something nice. It's going to be like something you've never seen. When you see it, you're going to be like, whoa, yeah, you're going to be happy you have one. Hopefully some of you guys will be chilling on things like this. NetJets has nothing to do with me. I just want you to know I like the jet. I like the sunrise. I thought that was nice. I saw that and I was like, that's very nice. Like, good morning. Huh? What a good morning. Yes, it's a beautiful morning. So I just wanted to bring that up. I like jets. I like fast cars. I like all that good stuff. You guys do too. As we're making money, we can project out to some stuff like that. But what we're looking at, these timing intervals, like bam, everybody's like, good gosh, man. Yeah, do you see how the derivative analysis works? Do you see how technical components come into play and how being able to use TradingView and being able to accurately project these things? I mean, they'll get into the fact they'll start calling you, you're a wizard, you're this and no. I'm applying the tools at hand to the investment concern. I'm making sure we have, let's say for instance here, that we know from this low to the high. I'm showing people how profits are created, okay? In theory, you could maybe say at this point, in theory, we're way past like theory. We're into the application of the technicals on kind of let's say a textbook theoretical framework. I have a degree in economics, okay? I've done studies at Harvard, what was that, Harvard Business School? Yeah, the Baker Bloomberg Library. I know it well, all right? It's kind of boring in there. There's no, you talk about a VIP zone. That is not a VIP zone. You want to go into study the core books there. It's kind of boring. But look at this. From the low to the high, okay? From the low to the high. These intervals carry over. They're exactly repeatable. Look at that, guys. I just cloned these. All right, so this is the trading action on Doge. It's one of the guys that's better than GameStop. It's better than whatever else you're looking at. It's hot. The pricing action's hot. It feels good to make money on Doge. It's repeatable too. Look at this. All right, we called this target out. Bam. Okay, we called out this target ahead of time too. What was that? 70%. 70% there on the breakout. This was a 70%. Easy. 70% again. This a few trades up in here. It skipped a level. That's fine. It made it up very quickly. Very quickly. If the strategy ever, if the retracement strategy ever fails you, typically it's going to pick up again quickly. All these zones are trading opportunities, guys. You want to say, well, isn't it just enough to buy and hold? Well, you can if you want 50% of the value of your account to go to. If you want to lose 50% of the value of your account, or was it 65%? You don't want to lose 65% of the value of your account. I mean, test it out. I mean, try something out. Like we were live on this up 70%. You have to say, I mean, let's test the liquidity of the market. I mean, even Elon Musk did that. He's kind of the forerunner in crypto. I think he is. He and Saylor are kind of the forerunners in crypto. Elon loves Doge. It's going to be a good weekend with him going to Saturday Night Live. The good thing is the run up here, guys, it's been phenomenal. And just look, I want to bring up this derivative analysis I derived from these previous pricing actions, these previous frequency analysis, and I get into the duration as well. That was where I got into the spring concept here, this spring-loaded concept, bam, to the upside. That we wouldn't necessarily have to go through, because we had hit that artificial barrier that didn't necessarily need to apply that 45 cents yesterday. Okay, I thought it was kind of premature and it was not necessary. So I did see also, based upon a frequency duration, you can look at the previous video if you want to, but I'm glad you're listening now because you don't have to. I talked about the duration of these and the nature of the consolidations that was going on, and the fact that it just looked like, given the run-in with the 45, that we're kind of spring-loaded for an event, and that was premature, kind of a premature limitation, and I could easily see it going through to the upside. We talked about some heavier investment levels at the Fibonacci's, at the retracement levels here, to try and engage some cash. Okay, to try and get people in the mindset that this is a bullish market. I'm not going to just say buy, buy, buy. You're not going to get that from me. All right, and I guess it could have been effective, but I want you to gauge and understand your trades. I want you to understand retracement theory. What are these numbers on a Fibonacci? Okay, it's the simplest way of coming up with pricing targets in like 10 seconds, guys. That is exactly what it is. If you want to re-engage, you want to buy low, sell high. How are you going to do it? Well, it's high. Okay, great. You want to buy low? Great. It's high right now. Perfect. Boom. You immediately, within 2 seconds, guys, that literally took 2 seconds. Literally. You already have your pricing targets right here on the left. Bam, at the 23.6, at the 38.2, at the 50, at the 61.8, and at the 78.6. Bam, right next to it. You have your 43 cents, 42 cents, 41 cents, 40 cents, and 39 cents. Bam. And then if you already have, guys, that's how quick it is. That's how easy it is. This is not rocket science. Reaccumulating after you reach Space Ranger. Shout out to you, brother. Because he was in the group, he got this perfectly. He timed it perfectly on the exit here. Beautiful. Now it's time to, literally, you spend 2 seconds, guys, about 2 seconds. You already have on your screen whatever investment levels you're using, whether or not it's a 1x, 2x, 6x, 18x, 54x. That's just 100, 200, 600, doubling and tripling down as you get into the lower levels. It just keeps you minded and kind of behaved in terms of a typical behavior that would apply, rational behavior for a demand curve. At the lower prices, you're going to have more demand. You see that? That's all this is. Talk about 1x, okay, you double down, you triple down, you triple down. All it is saying, okay, you understand a demand curve. Anyone who's done any kind of business, you understand at a cheaper price, you have more demand. At a really expensive price, you really don't have much demand, if at all, right? So just kind of pepper in. I always tell people, just kind of pepper in at the top. Make sure if there's some positive price action, you've taken profits, you stack that aside. You're going to stack, essentially at some point your principal, times your principal times 2, times 3, 4x, 5x, etc. You're going to stack that aside. So you want some exposure at the top. Some of you may decide, you know what, I understand that. It's going to engage more of my capital. It's going to lower my cost basis, lower your cost per coin, or cost per share, etc. Some of you just say, well, instead of that, and I brought this up earlier, I will teach VIPs how to do this soon. But yeah, I just want the golden pocket. That's all I want in London. I'm going to go to that high price action. I just want to get back into the golden pocket. Sure enough, you hit the golden pocket very well. That's a critical zone, okay? That also figured into last night. We discussed that last night in terms of what could make this really rocket and kind of go up. Look at these. Look, guys, I want to just bring this up to you again. You guys understand the nature of the difficulty of coming up with timing estimates. Timing. When, where, and how, right? Talking about this potentially going up. Look at the role that this plays, this teal dotted line here. Look at the role that these trading lanes, because you're going to think trading lanes, everyone's going to think, well, no, we just think it's a matter of resistance. It might be. It might still just be that reflected on a duration kind of a duration basis or a duration indicator. The indicator, the duration indicator, along with the pricing and duration is going to be your candlestick at these intervals of 1 hour. Okay, it's going to be the top left of your trading view. So you're going to have, you're going to have the price moving. Then you're going to have some, you could say, kind of a resistance level. Maybe I'd say a resistance is okay. Resistance turned into support. There's some kind of a transfer. You don't necessarily want to call it a resistance, though. You understand? Because it is able to kind of smoothly, kind of, I don't want to talk zigzags. I don't want to get into, ticks, zigzags, some technical componentry we don't need to necessarily discuss. but it gives you the idea that these are perfect in terms of looking at, the and let's bring let's bring up one of the trend lines just so I can kind of point at those. At each and every lane, okay, that is crossed here, right here, do you see the transfer over and the creation of a new candle? Yeah, so it turns into a duration measurement right here. At the next, this yellow line, okay, at this yellow line, we see we see another duration event. Very difficult to predict, guys. Very difficult to throw on a map. Nobody else on YouTube is going to do this. I can tell you that in terms of Doge or anything else. I mean, maybe something else. Maybe there's some forex. I think Fu is good. She's a girl out of Malaysia. She does some forex. I like her work. There's some other traders that are good. Guys out of England, I don't mind watching their stuff. But this duration analysis, bam, this turns into a duration event. We put these up last night, guys. We were down in here. All right, bam. This is perfection. Bam, right here. You see this? Yeah. Duration, okay? Moving sideways, pushing over in time. Yeah, pushing over in time. You saw how this yellow one is more, this yellow line is more, I'm going to say more significant, more significantly measured, that kind of the mid-level, the midpoint, kind of the mid lane in the highway, essentially. Or you want to look at a fence, you want to look at trading lanes. I'm just going to say define it as trading lanes, okay? So we passed through that midway point was the biggest point. Then we got to this dashed line again. Guys, this was all drawn out since last night. I just went to sleep. All right, bam, bam. You see that? Yeah, perfect. You see that duration push over? That hour frequency becoming crucial? Yeah, you see the mid-level being more crucial of what I drew out? Yeah. Okay, mid-level is more crucial, okay? This is a kind of a duration event. Bam, let's move over an hour. This, a little more crucial. Let's decide exactly where we're going, reconfirm that. Not a big push in price. Here, again, let's push over an interval. Here at the yellow line, let's push over an interval. Okay, so the level of precision that you are witnessing right there, guys, that is rarely achieved. You guys know that. I'm happy to have you guys as VIPs, etc. That's phenomenal. I'm glad that you guys understand that duration, that frequency analysis as it's applied to the pricing. You can't really get much more specific or tuned in after having a discussion on heavier amounts of cash being invested. You just can't do that. Recognizing the overall, I just say the overall risks involved, managing your risks, always being willing to go talk to your broker, because I'm not your financial manager or your broker. You guys know that, right? That's not why I'm here at all. It is not my intention to talk about your plans to send your kids to college, or why you can or why you can't, or which college you want them to go to. I'm not going to sit down with a pad of paper and a bunch of legal, some of you guys from Soho, etc. I'm happy to have you here. But yeah, we're not going to be talking about your overall budget and whether or not this year it's going to be the Lincoln Navigator, or it's going to be University of Pittsburgh is going to require a tuition hike of 6%. And let's figure that in. No, I want to talk about technical analysis. I want to talk about trading. Let me pick my pen up. Excuse me. And just the level of precision. You guys, I don't have to sell you on it. You see it right in front of your face. So this is what the channel is about. This is Crypto Kingdom. My name is London. We have reintroduction. We have opportunities to join our VIP. Why? Because we're literally smoking it, guys. We're just smoking the projections. We're smoking exactly. It's like you said, we're smoking the market right now. We're really achieving alpha, and we're happy to be able to do that consistently. We've done that. It is positive price action. This was since last night, and guys, it's important for us because we told our VIPs, it's unstoppable. It hit this imaginary wall at 45. Then we talked last night about the fact, I think that's kind of a premature, kind of invented level. I don't really like that. I could see it going up. Talking about investing amounts of money, like significant amounts of money, guys. I mean, I'm not going to just come on unless it looks very bullish. I'm not going to come on and just say, yeah, maybe about $8,000 into it. I mean, come on. I mean, that's a hypothetical. First of all, you guys know that hypothetical. Anyone who put in $8,000 last night, I mean, what are you going to say, guys? If you put in $8,000 last night while we were live, you guys understand this, right? If you did, I mean, I don't know how much you guys put in. I'm not suggesting you put in any amount of money at any specific level. That's okay. You've made $2,500 for every $8,000 you put in. All right. For every $10,000, you just made $3,000. All right, based upon you're there right now at 30% to the upside. Okay, based upon our kind of look at things, our trading lanes, everything else, everything's worked out perfectly. You're up 30% just on that. Now, going back, if you did decide to hold or you traded, okay, because you didn't have to be a part of this. What was it? Who was it? Space Ranger. Space Ranger proved to us you didn't have to be a part of the overall dynamic of this. You just didn't. Okay, you could have exited exactly where he exited. He was there. He let everybody know through a super chat. We appreciate you guys letting people know through the super chat what you're doing. It's not as much for me, all right. But it's letting other people know what you're doing. It's letting them know you're doing well and what success. Again, I want to know your strategy. Space Ranger, he exited perfectly at this peak or this apex of the price action, right? Yeah, and then we talked about immediately. We threw in our within 2 seconds, guys. We're just there. Okay. Now that's set on a golden pocket, which hit. That's fine. I've set mine to a golden pocket. I also have defaults I can apply. I can apply 2 or 3 different Fibonacci levels within a period of minutes, guys. I can literally do this within a period of minutes. So let's look at. Hold on. Let me get out of this. Let me see where we're at. Come on. Okay. Let's see. So in line with this, I'm literally immediately throwing in a Fibonacci, like Space Ranger did. He's a great guy, a good supporter of the group here. He supports you guys through letting you guys know what he's doing. So as we a lot of us do. So as we get through this, I draw this in, and with a matter of just seconds, look, boom, I have different investment levels. I have different retracement levels. Boom, I have retracement levels. No problem. Right? Immediately talking about cash that flows into each one of those levels. I literally have it scripted out. It scripts out for me what the investment levels are, what they are. I have the price, I have the percentage retracement, and I have predefined what my investment levels are. Some people just want to hit that golden pocket. Great. Let it hit the golden pocket. Everyone wants to chase it. The notion is you want to chase it when it's going up, right? That's the worst thing you can do, guys. Let the sucker cool off. Let it breathe a little bit. Let this continue to go up. You're involved right now. You guys are involved. A lot of you are involved in this, given what we talked about last night. These trading lanes have been cleared. You want to know, and I think Beach did ask, Adam Beach asked particularly, what do you, essentially, what do you see as being the important kind of the future of things here, right? What, tell us about the future. I've brought up this right here, all right? This is a previous pricing interval, okay, kind of a previous pricing target. It has changed a little bit, okay. It's a previous, as we talk about these, let's do this. I want to always keep this. I want to clone another one. These are the previous price actions in terms of what has happened previously. I want to talk about not only this, kind of a derivative, I call it a derivative analysis, because it's not an average, it's not an exact science, and I include other variables, okay. I do kind of computational work, guys. So as I look at the previous price action here, okay, and let's do this on the lines. As I do this on the lines right here, okay, as I'm looking at this, let's just do it on the lines. We can do it on. You guys want to do it on the lines or on the candles? I'll do it on the. We just did it on the lines to start with, so we should probably stick with. On the candles to start with, so we should probably stick with that. I'm going to say that. Normally, I'll use the lines. If I go with the candles, I'll probably use the candles. We can do both. Understand they're going to be different. One maxes out, one doesn't. Okay, candles typically max out price action, whereas the lines more kind of I always say consolidated view, because they're not going to get the extremes. There's going to be a point in time. All right, so you're not going to necessarily see, but let's look on the line chart. Well, you guys want some perfection, right? Boom, look at that on the line chart. These are from last night. This is our information from last night. What are these trading lanes? You see that? That's gorgeous, guys. Little dog leg up, right? Just phenomenal. Thread the needle. Thread that needle all day long. Hello. Everybody's like, hello. That looks sweet, doesn't it? Man, that's nice. Nice. They talk about fintech, the fintech industry. Financial technology. Like, look at this stuff. This is a great program, huh? To enable us to do that ahead of time and to be able to share that with people. Good heavens, huh? That is phenomenal. For those of you who get that, that's like, whoa, yeah, wow, okay, that's great. That's beautiful. That's perfect. So as we look at kind of bringing over some data, that should be the easy part in terms of what your threshold is. What's your gain threshold here? And let's look at the overall market. I always like to take a look at the overall market because Doge is killing it right now. 34%. It's the go-to big dog right now, okay? Everybody wants to throw into Doge. That's right. It's hot. Atari's also hot, you guys. Atari is hot. Waves make a little bit of action again. That's nice. I'm getting to know everything. BCH, Bitcoin, no, yeah, BCH, Bitcoin Cash, actually looking a little strong. Impressive. I had a criticism on that yesterday. I was like, why is Uniswap wanting to play around a little bit? Good. Uniswap, Bitcoin Cash, Atari. These are things I watch. So now we want to talk about your threshold. What's your threshold in terms of your profitability? Okay, your threshold, the profitability. What does that look like right now? What do you want to base that on? Okay, we know that this type of price action is nice. Let's look at it, okay? Because I mean, whoa, we are yeah, we're shooting on up in there. The last time we did this, I brought this up last night. The last time we did this, it was in and around this move that I was a part of. I entered into the bull pennant breakout, okay? To the pennant breakout. This bull pennant was beautiful. I wasn't going to miss it. When it broke out, I was on it, guys. It was no chance I was going to miss that. It moved up 50% in 1 hour. Everyone's always waiting for that, huh? This was that golden moment, is a 50% increase in price in one candle, in 1 hour, 50%. Now, yeah, Doge is about to hit 60 cents. 60 cents, no problem. Expecting it, expecting great things as Elon gets into Saturday Night Live. Other channels may be yelling about different things, all this different stuff. That's fine. We're talking about technicals. We're talking about thresholds. We're talking about profiting. All right. We're trying to create a dynamic that's repeatable, that we can achieve alpha. All right. Now, I'll never tell anybody, your time in terms of when to exit. That's your deal. That's 100% your deal, because I don't want at the end of the day, like, man, I could have paid my my new Rolls Royce car payment. It's like, I don't. At some point, you're going to get overextended. It's like, you shouldn't have a car payment if you got a Rolls Royce, brother. At some point, it's like, I can't pay for the extra. The surcharge on my jet fuel is a little much right now. I was like, yeah, it probably is. But I don't know. Those are just jokes to get involved in kind of, what's the ideology here. But yeah, this previous gain event, let's just talk here. The previous gain, okay? The previous gain. If you bring into the candles, okay, it was exactly this. And that's just textbook, guys. That's textbook. As we look back into the actual candles, yeah, it's just perfect. You see that? That's the threshold. That is computationally sound. Now, as we look at kind of the price action of what is to be kind of expected, what we've experienced. Now, understand, this was, and I always go to the percentages, and then I also go to the kind of the hardline pricing increase, the hardline figures. 70%, okay? A 70% move, right? 132% move, okay? This one here was another 70% move that was on our pricing target. Literally, we gave you the target ahead of time, right? So 70% move. 80% move. Beautiful. Very nice. I think it's 75% we were live for, and like the coach has blown the whistle. Now, we have known that Dogecoin recently has kind of been involved with a few different days, and I talked about this yesterday. It's been involved in a few different days where it likes to kind of show up when everything else is down, and it likes to show up at about 30% and kind of hang out there, right? We discussed that exactly. Now, this previous pricing event, as we kind of do an extrapolation here, as we bring this over, yeah, we're looking into something that's going to, depending upon where we draw our lines, it may have met that threshold pricing action based upon the overall, I'd say the actual, let's say the rise, the actual, what do you want to call that? A nominal rise in price? Okay. I want to say that the actual standardized level of depreciation, the gain in price on the price amount, let's say the actual price amount that's gained. Okay, the price action that's achieved just in terms of the actual, if you were to subtract the high from the low, not percentage. I'm not talking percentage. As you're lower in the price action, okay, the same movement in price will achieve you, okay, a greater percentage. As you're lower in the price action, if you're dealing with something that's 10 cents or $10, okay, the same amount of a price movement, let's say if we take one of these intervals, the same amount of price movement will be a larger percentage the lower you are into the pricing dynamics of a coin or an investment. Okay? So these are repeatable. What this kind of shows us is that we've fallen into a trap here of increasing less and less until we got to this point in time. That's why I talk about like a spring-loaded coil, right? Because we were falling into, as the price goes up and we achieve essentially the same pricing dynamic or the same rise in price, essentially, guys, we're kind of making a little less every time. So that made the sweet spot really sweet there with the golden pocket, okay? And this overall dynamic, let's just measure it for the books here. You're up, if we do that, you're up that's 286%. Since the time of our golden pocket, you guys see how repeatable it is, okay? These pricing dynamics These are carbon copies, guys. These are carbon copy pricing intervals. But it has gotten, and that's one of the reasons that we can say we kind of spring load, is because as we get into a repeatable event like that, and we run into something, this is just so bullish, okay? It's program trading. It's consistent demand. And as you look into something here, it doesn't need to be, it's kind of an artificial level of resistance. That 45 didn't need to be respected, but people had already made money from that standpoint. We had people who made money, I think the first time and the second time on that, reaccumulated at a lower price. I know you did, because last night you were watching the video and some of you guys bought in, so that's nice. The VIP guys got a notification that nothing can stop Doge. You guys all did yesterday on the program, so that's nice. You guys all got that notification. Okay, you all got the message loud and clear. Nothing can stop Doge. You guys saw these last night. If you go back, these are our trading lanes. They're perfectly respected, guys. Perfectly respected by the candle work. Look at this, just phenomenal. In line with this, we decided to break out. I said, very possible. I would almost not be surprised at all. Almost expect that it would want to continue up more in a quicker fashion. That was the only question, guys, last night was, it wasn't whether or not it was going to, essentially. Now, it could. It could. Theoretically, it could go down. It could have, let's say. But the question was whether or not we were going to frustrate and consolidate in line with his previous actions, but we had just run into kind of what I deemed to be an artificial barrier. We didn't have to respect that 45. Psychologically, people had already danced around with that and made money back here at the 45 level. So it was kind of respected in around here. This yellow dotted line essentially is what that is. People had already made money selling there, so it kind of happened again. But it didn't necessarily need to happen. There wasn't really a good reason why it had to happen there. If anything, I'll just say this 44 kind of would have needed to happen instead. So the fact it wanted to tick up to the 45 is kind of like, really, it's more bullish. It's touching in. There's just some different reasons. You guys go back to that other video. I don't want to recreate all the analytics. Like when I talk about the pricing intervals and the gain theory, derivative gain theory, GAIN, gain theory. I just want you to understand that a lot of technicals go into this. You guys understand that. So where we're at now, we're at a different trajectory. We're at a different pricing trajectory. We have hit that huge, the huge price to the upside. We're just excited about that. And this is exactly what we expected. The differentials here in terms of applying these, okay, you're right in line with the previous pricing event, but I bring up, and sorry to get a little bit long-winded on that, but I do bring up these frequencies. As you go up the same amount, okay, of the actual, if you say we're going to add 20% onto something, you're going to have to travel up a greater the actual price, the overall amount of the price is going to have to increase as you go up. 20% of $100 is 20, right? 20% of 20 is like 4. So the 20% to be achieved at the higher levels, you're going to have to increase more, okay? Travel more distance on your in terms of your chart that you're looking at. So those are just some different dynamics. I'll just throw up, if you lose money, always consider this. When we start talking about differentials at different levels, etc., if you lose money, if you lose 20%, you're always going to have to make back more than 20% to get back to where you were. You're going to have to gain more than 20%. Think of $100. Think of this real quickly, guys, and let this sink in. If you have $100 and you lose 50% of it, you're going to get down to $50. You're going to have to make more than 50%. You just lost 50%. You're going to have to make back more than 50% to get back up to 100. You're going to have to make 100% on your money. So the same is true if you lose 10%, you're going to have to make back more than 10%. Every time. It's easier to lose money than it is to make money. You have to be careful about your position in the markets. Just speaking in terms of percentages, okay? I like to think in terms of that because it keeps you guarded and it keeps you kind of aggressive at the right points in time, etc. So these intervals here, the overall appreciation, the difference between the 15 cents and this, let's say 27 cents, the 12, it went up in the context of this, okay? And the difference between here, let's say the 32 cents and this 43 cents, is about 11. It's slowly gonna taper off to where, and actually, let's say the percentage is slowly gonna taper off. This should be about exactly, actually. It should be the 11 to the 12. Jeff Arnett, I'm so glad that you upgraded to the VIP zone. Jeff is in the house, guys. Jeff is literally in the house. We're so happy to have you. I needed a little spurt of energy Jeff Arnett, what's going on? I will be honest. Last night I was just tired. I was like, I'm tired. I have to get this information to him. It's not easy to just consistently bring you guys hardcore technicals. My brain sometimes is like, gosh, we have to keep doing this. It's a pleasure to do it, but we stream for a while sometimes because people like Jeff and you other guys, Lars, Kent, Matt, Jellica, Bent Frog, David Sweet, Jeff Arnett are in the house. These are our VIP members. They're going to get exclusive member benefits, and you guys are seeing. You're plugging in. You're making money. And again, guys, if you just watched last night, you literally probably would have covered your annual membership, your annual dues in the VIP club. So it's nice to have you, Jeff. It's been nice to interact with you along the way, and all of you. We look forward to doing that. And that's the big boy club, the big girls too. We got some some beautiful girls. I don't know, it's VIP club, so beautiful girls and big guys, the big guys on the street, the ones who see the trading lanes ahead of time. That would be us. The trading lanes ahead of time and call them out perfectly. That would be us. All right, that would be what we're into. All right, that's the group. If you're going to belong to a group, you might as well belong to the group that's going to see the trading lanes. People don't even know necessarily what this is. Like, what is that? Well, that was up from last night. Those are like trading lanes, right? And what happens? Well, we kind of push sideways on these key demarcations, right? We push sideways in along here. This dotted line, yeah, we push sideways as an hour. We push sideways at this major interval here. Boom, 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 boom. Yeah. The key frustration was this one, right? Then at the next dotted line, boom, we push an hour. These are the only points in time where we're pushing, guys. The candles are being recreated. It's a perfect duration analysis. Boom, we're pushing sideways. Yeah? Yeah. The next level up. Boom, we're pushing sideways. Now we're wanting to flirt with a green or with a red candle right here. I'll show you why that is happening, okay? Why is that happening? Well, I tried to put forth a little bit of a discussion. I don't necessarily the actual, if you throw a dollar onto the price and it's 50 cents, that's going to make a big difference. If you throw a dollar onto the price and it's $300, that's not going to make much difference, right? Yeah, so the percentage increase of, okay, say the difference in a dollar at 300 is much different than a percentage increase at the difference of 50 cents. And we'll remember me saying, if we throw a dollar onto something that costs 50 cents, you have a bigger percentage increase. You'll refer back to this point in time when I said, if you throw a dollar onto, 50 cents, you're going to have a larger percentage increase than if something else were $300. Okay? So you guys will remember that. Jeff, we appreciate you being a member. And you remember when you joined, I said, if we threw a dollar onto it, make this $1.57. Yes. If we make this $1.57. Okay? Yeah. I believe I've spoken about this very, very favorably since about my friends and I started really getting into this about at 007. All right? It was 0.007. All right? So, yeah, Elon's involved in it. It's got a great future to it. It's being managed extraordinarily well from a pricing standpoint. It's very predictable, and the price action is beautiful. It's required some patience and some business knowledge. I'd say some technical skills in terms of being able to master it. It's not just something you want to shake a stick out and say, I'm going to throw all my money into it right now. No. Very specific times like last night am I bringing out some heavier amounts of cash on this. And you guys who follow the channel, you know this, okay? I don't let my internal group just know all the time, nothing can stop such and such. I did bring up I think also to them this invisible wall of the 45, okay, to the VIP club. Then last night we streamed to go ahead and say, we're spring loaded. We're ready to coil out of this thing, okay? It doesn't look like we need to frustrate in terms of a pricing, kind of a consolidation, because it's being interrupted by that 45, kind of that invisible wall that doesn't need to be there. Okay, so we did that analysis last night. We've done this analysis this morning showing you guys this is kind of these are the stair steps. This is beautiful. It's too beautiful. I mean, in terms of not being able to recognize this is a trend. Yes, this is a trend. We trade the trend. So in along the first move, we're fine. In along the second move, hold on, trend, right? You see that? That's what we get into there. So Jeff, we're looking forward to you being a part of with some good guys joining today from Soho. I mean, we're happy to have Soho. We're happy to have Jeff. We're happy to have David, Angelica, Bent Frog. We have Bent Frog. Is it Bent Frog? I don't know how to say it. Angelica, Matt, Kent, and Lars. Some of you guys are also alpha traders. That's an intensive kind of program for people who really want to get alpha down. And I mean, they're getting it down, guys. A lot of discipline in that group. The VIP group is a great club that's going to get a lot of insider information. But I wanted to bring up this. You heard about some heavier levels of investment last night from me, directly imputed into the pricing structure last night. I don't always talk about, without grave qualification, right? We got Paul Wilson in the VIP house as well. Paul Wilson in the VIP. What's going on, Paul? Nice to have you, brother. Would love to know where you guys are from. If you guys want to drop that information too, make sure we get that information. Maybe even get it to Bond. Bond is a moderator right now. But yeah, let's check out where you're from. Bond missed last night. I'm sorry about that. Last night we went over heavier amounts of investment at this area, in this pricing area. Why? Well, it looked that bullish, guys. It looked that bullish. It was a heavier level of investment time. Typically, I'm not there, guys. I'm not there along the way necessarily. Okay, and I don't get into exactly my moves, exactly why or how I'm going to make them and when. What I will say is on the whole and aggregate, when I'm pushing the information and the strategy that's best suited towards profits, I'm talking about heavier amounts of investment here. Okay? Guys, I haven't really picked up this whole 5,400 idea, this whole $8,000. I kind of carry around $8,000 just because it's kind of reasonable. I know a lot of people that carry around like $8,000. What's the max you can carry on an airplane? Like 10,000 or something? So we kind of, as we fly around, it's an example. Again, the top level is 100, it might be 1,000. All right, the bottom level is 5,400, it might be 54,000. It might be 5.4 million on the bottom. You might be really playing heavily. If you are, that's cool. That's no sweat off my back. That's I've worked with a lot of heavy hitters, guys. I've worked with some major players. So yeah, so have you. You guys are very well accomplished. Congratulations and just another big welcome. And Jeff Arnett is saying last night was awesome. Yes, it was, brother. What's up? He saw it last night. He saw the stream last night. Got involved. He saw what Space Ranger had done in terms of the reaccumulation strategy, the discussion on the investment levels, how bullish things were looking. And South Orange County, California, what's up, brother? You got to be kidding me on that one, huh? What's going on with Orange County? Love some Orange County. That is wonderful. Yeah. And Connecticut, what's up, brother? Connecticut, we love Connecticut, man. You've got a beautiful state up there. Phenomenal that you're involved. Love Connecticut. A lot of great hedge funds, a lot of great investment opportunities up there, etc. And let's see. I may have to go and help the dogs real quickly. They're upset. I think they have been the most beautiful woman in the house that I'm supposed to be paying attention to has probably left me alone, is upset. That's okay. She'll get over that. We got to attend to details here, I think. So I may have to go rescue the pups here in a second. Don't ever buy your very good looking so some of you, like, I don't know. Let's not get into the details on this. Let's just talk about whatever we're going to talk about. Hot chicks like just gonna say hot chicks. I can say that, right? Hot chicks, they like little puppies, right? And so you want to keep your girlfriend happy, your wife happy, whoever that is. Beautiful women. Let's say beautiful women love. I don't want to be chauvinistic at all, but they love like little puppies. I don't know why. They just always seem to like flowers and puppies. So maybe that's my advanced concept of learning from beautiful women, right? Or about beautiful women. They like puppies and flowers. Like it's like clearly I've spent enough time in the market, right? So as we look at that, though, I get them the puppies, and then they just bark all the time, and I'm like, it's kind of a headache. So anyway, they just like flowers and beautiful puppies. It's not a tough equation, really. I mean, you get a beautiful woman, flowers, dinner, and a nice little puppy. They're going to be happy, right? But then you got to deal with the puppies, right? So flowers are a better option maybe sometimes. But as we look at that, it's not a difficult equation. Be respectful towards women and kindness to others, even strangers that you meet. We always talk about investing in other relationships, and I mean that seriously. That's a genuine part of who I am. So we are seeing this kind of, I like to see this Orange County, like to see the Connecticut here in Dallas. What's up? Bent Frog? Nice to see you, brother. I'm gonna write D-Town. D-Town is awesome. Great facilities. You know some people there. The Crow family, the Harlan Crow family. You want to know? The great family up there. They do some $1 billion equity funds up there. Yes, sir. Harlan Crow and around Dallas, Texas. Now you know. It's like, yeah, brother knows his business, right? Yes, sir. Yes, sir. So what we got here? Love that fast in and out. You got that right. Ohio. Jeff Arnett, we got Ohio. This is a great deal for us to be able to communicate, guys. This is what it's all about. And I'm working in. You're working in Massachusetts right now, David. Sweet, very good. You're in Massachusetts right now. Beautiful. And in Massachusetts, we have. What do we have in Massachusetts? We have. I guess we have Harvard Business School in Massachusetts. You have your library if you ever need to go in. They're not going to just let you into the Bloomberg building or the Bloomberg building or the Baker Library there at Harvard Business School. Walk across, Kennedy Bridge, very nice, beautiful setting. Cambridge is beautiful. At the end of the day, you got to have a little bit of credentials to get in there. I think you can go visit and tour, but if you want to study there, you got to be in the program. A lot of executive education programs now. I don't know that you need the MBA anymore. The negotiation mastery, I would recommend the negotiation mastery. It's a lot of fun. You get to interact with people directly at Microsoft, etc. And that's some big time players. You'll interface with some big time world leader level magnets and some different people there. So it's nice. Nice place to study. You guys will enjoy it. And let's look at this. I want to kind of bring up this whole initial zone here and kind of bring back the idea of this. Okay, it's not a warning cone. Okay, it could be viewed as one, but typically it's a price structure that I like to bring into the mix for people who may be involved and may have seen some dramatic gains. Okay, over the previous, it's not a cone. It's not a cone. Okay, I just want to now out of an abundance of kind of market behavior, an abundance of respect for market behavior. When we talked about this last night. Now, when we see just phenomenal gains like this, the idea in general. Now, I did just talk about at some point adding $1 onto 54 cents or 56 cents. All right. Before it does all of that, it's going to want to exercise its price action, and you're seeing it kind of fall out here, okay, with this warning cone. Highly accelerated in terms of price. Now it's slamming around right now. It's getting a lot of price action. Everybody's loving this thing, right? Now look at this. You see this? What we've laid over. Now this is phenomenal. This is why we did this, guys. As you look at this, and I'm talking about eventually throwing $1 onto the dollar into the 54. So if you want to trade, you want to learn how this is done, you can learn how to do this on the fly. As we look at this is his previous price action. Okay, not the percentage, but we haven't been dealing with percentages. What's kind of the threshold tolerance here that we can apply over? These are price actions that perfectly copied over, right? Yes, perfectly copied over. So as we look at that, let's move this up to here. Wow, yeah, that's why it was moved. All right, and you guys probably you guys saw that without me discussing. Again, I don't want to tell you guys when to get in and when to get out. I don't necessarily want you to have trading lanes and not understand what your trading lanes are. Okay, this is a highly volatile situation right now. But you're going to see. Look at this. This is the level of technicals that we bring over. I do it on the fly. Okay, you guys can learn to do it in a heartbeat, right? Just no problem. As quick as you can throw this stuff together, you can learn to do this. These are essentially probably going to be program trades. If you're sitting there hammering through your phone, you're probably missing it. Okay? If you're hammering through your phone, you're probably missing it. That's okay. That's okay. Now, if we see a retracement like this, we're preparing the downside always with more cash, more reserve cash at all points in time. Do realize that. The knowledge you're putting together, if you're on the fly trying to trade this real quickly, you're missing the boat, guys. This gets to the point where it's programmed ahead of time. You guys understand that with the trading lanes, the way they were lined out, you're like, yeah, absolutely. It must have been the case, right? You pushed on this top level, and guys, this is a structure of more money at the lower levels. Okay? Some people want to scale out. They make a great 30%. They're involved with 100 grand, something like that. They want to kind of scale out, right? Yeah, that makes sense. Okay, your profit model is your profit model. I'm not going to get into it again when I talk about it. I don't want to know about Susie and Joey. They're at the University of Pittsburgh or New York or Syracuse or wherever they're at in Orange County or what do they got? Santa Barbara. That's not Penn, Yale, Harvard, wherever they're at. I don't get into those issues with you. This is not a money management talk. This is a talk about your threshold, about the reasonably anticipated levels that are reached based upon the previous histories, and incorporating this into you, even right now, to like, well, it would have been nice if you just told us to sell. Look at it. It's gone down what? It's gone down 10%. Great opportunity for people to buy. Some people want to buy at 10%. Yeah, some people wanted to get a discount in and around here. Some people have already done the work, okay, and I'm just going to say I'm presenting this to you now to understand how our theories go here. Okay, we're applying, and I applied this over beforehand. You guys can see that. But you see that anyone who's looking at the screen, like that's the threshold level, right? And it is. It wound up being a threshold level exactly, right? Now, it wasn't as clear cut as last night. I'm not going to, because I did say I'm not going to tell people when to sell. I'm not involved in that, guys. That's not what I want to bring to the table is, no, a possible pricing, and exit strategy, great. We can get into some different kind of nuances of that, but I don't want to be in charge of where you guys sell your goods. I don't want to run your accounts. Does that make sense? I want to give you the technical skills, and I'll give you the pricing targets. How about, you guys understand? I'll give you the pricing targets. You may say, well, one is useless without the other. I disagree, because you're going to learn why I put up these trading lanes and why they were perfectly respected. You'll learn that. You'll learn, if you hang out long enough, you'll learn the pricing dynamics of exactly why this was hit up top. You're seeing it right now. You're seeing exactly why it was hit on top. I'm giving you the answer so next time you'll know, right? You had kind of one of two options in between this on a more aggressive price action. You had this previous pricing event that we were a part of. The group dynamic was there. Okay, can it push higher? It can absolutely push higher, We've just had those days. Do you guys remember this now? We kind of had those days where, Doge is kind of up and around 20, 30%, kind of holding while everything else is down. The money's just hemorrhaging into Doge. So that's the technique that's used. I'd rather you guys learn the technique, potentially sacrifice on the 10% now, and just hold. Hold your breath. You can either hold your breath, or you can hold your stock, or you can do both. I'm not going to tell you what time it is to release either one. You guys, if you want to be anxious and you want to sweat it out, sweat it out. If you want to hold on to it. If you want to release it and cut it loose, and be like, I made my 20%. That's what I like. People who make their 20%, why? When you make your 20%, you only have to do that 4 times. 1, 2, 3, 4, and you double your money. You may be able to make more than 20%, but if you add, do 20% times, they do 1 by 20%, times 20% by 20% by 20%, you're going to double your money. Easily, guys. And it's just easy. It's like, I just need to make 20%. There's no problem with that. And it turns into a level where you feel pretty secure in the way that you're making these trades and executing these 20%. You may be waiting. Some people wait, okay? Some people exercise kind of diligence and caution, and they decide to wait. I want key levels. I want to know, like, key indicators. I'm going to risk a little bit more amount of cash, like I talked about last night, and at this golden pocket, I'm going to put in a little bit more money, all right? And I want to capitalize, I want to get 20% on that. But it's going to be with heavier amounts of cash. Levels that will support that heavier amount of investment. Not at a kind of a different level of, let's say, a 23.6, kind of an innocuous zone. It's kind of an innocuous level. I always talk about just peppering in some money, etc. But once you get to like the 50%, yeah, you're starting to talk some cash. Once if you double and triple down at every kind of tier, okay? There's a video on how to buy that's in the, you guys look at the program, the videos. There's one on how to buy into crypto. It talks about buying the dip at heavier, tiered down approaches, double and triple down as you get down into it. Just, guys, remaining in line with the demand curve, okay? Within the demand curve. That means at the lower prices, you're going to have more demand. It's real easy. We're trying to frame your mind around that fact. And sure enough, guys, as we did that, we've been talking about normal market behavior. What was it? CZ from Binance came out and he ripped somebody on Twitter. Did you guys see that? I was like, holy cow. The founder of Binance, the largest crypto exchange in the world, he said, he was talking back to someone. He said, any complaints, send them my way. And then he says, you've been dubbed as an unreasonable market participant. I was like, whoa. After we've been talking about just ordinary market behavior, yeah, CZ said that. And he says, you will now be demoted and you will not receive the standard level or the expected normal level of customer service. I was like, man, just ruthless. But he can't put up with people that act irrationally in the market. So that's what we talk about. We talk about the market. We talk about principles of economics. And we want to discuss that in a framework of you guys understanding at lower levels, you need to have larger amounts of cash. Right. If it gets very, very bullish, we went through a segment last night on becoming more bullish, working into kind of the bullish nature of something so that you can appreciate and kind of capitalize on something. Now, I won't say this at all, that I informed you that this was going to be the target. I didn't put that up there. I didn't say that, okay? I did not say that. I brought the line up there so you guys could see that ahead of the time when it really started to collapse from that line. But yeah, you had to kind of maybe do a little bit of a threshold analysis on your own. I said I wasn't going to tell you guys when the move is coming. And guys, this thing is flying around. It's literally flying around and it's getting some better action. I'd say it's getting some. Yeah, the market maker's busy right now. He's just filling orders everywhere, guys. You have to understand the price is going around all different directions. It's a decent time, to get in at a level. You may see it drop a lot, but someone may be coming in with a pretty significant order, right? They may be throwing in 100 grand, 250 grand. They may be throwing $1 million into this. You understand that? Some people may be throwing like $1 million, $2 million into this at a time. So when it looks like the market maker, he's going to have to find. Let's say this: when it looks like he's doing a job and it's hurting you. You can work with him in these retracements that are currently going on, and you can try and create some additional cash. Don't let it be haphazard. I wouldn't say, never let something become haphazard like that. It'd be nice to see it maintain this zone. If it doesn't, I won't be surprised at all. If it wants to enter into a retracement, that's beautiful. That's just beautiful, guys. If you've made your cash from last night to now, you're still in a great zone. You're still in a beautiful 20%. Beautiful, guys. We talked about that last night. Okay, 20%. Beautiful. Could have maxed out at what, 37%? I'd say the predictive level, guys, and I think you can kind of know where I would stand on the strategy. The predictable level, after me spending all the time this morning on these zones of cloning, would be exactly what this was. Ba-boom, right? Ba-boom. Right? It's just couldn't get any more simple for us. But I saw when I put this up, literally immediately when I started putting it up, people started to go, okay. So I know you guys, some of you guys got out, and some other people are doing the differentials on it. I think other people are doing the differentials on it. I don't know anyone who maybe outside of the context of this. We probably have some institutional guys that pay attention to this channel a little bit, and that's very nice. I know we have some very technical, very professional people involved in subscribing to the channel, and I really appreciate that. You VIP members are phenomenal. You alpha traders are phenomenal. Let's talk out to Bianca, okay, to Kenny, okay, to Kent, okay, alpha traders, to Al and Chris. You're doing a great job as well. Technical traders behind the alpha traders, the VIPs, guys. That's kind of the long range plan. I'm going to tell you, the people who saw last night and got in, you've already paid for your VIP for a year. That's just it. It's $99 a month. Guys, you've already paid for that for a year. If you got in heavy, we talked about heavy cash last night, gave some indications here. If you weren't paying attention, hang around. It's not going to be overnight. I tell people it's not a get-rich-quick scheme. It's just not. It's based on calculatives. So the previous event before today, I'll tell you for the heavy cash to flow in, I'll just tell you this as a matter of fact. Previous event was about 10 days ago, 11 days ago. Since then, you've made probably 300% of your money if you just held. So this was a period of time last night where we saw kind of a recoil action in excess of the standard gains that they've been producing within these frequencies. That's just beautiful. That's very tradable, guys. Low to the high, low to the high. I mean, it's programmable. It's literally programmable, guys. You can sit there with your order book. You can go through it and program trades up. You can go out, have a good time, stay healthy, go out to eat, and have a good life. You can spend time with your family. There's some different. When you see something that is that programmable, guys, when you see literally just hello, that's what you want to achieve. You want to achieve a level of predictability in your trades. So as we're talking about some reaccumulation, Jeff, absolutely, we'll get you those key levels. We're going to make sure and get you those. Oz, we appreciate you spending time, guys. We also do follow us up on Twitter if you guys want to do that. I would love you guys. I'm gonna go ahead and bring this up. Twitter, you guys in VIP. Also, go ahead and do Twitter for us. The Kingdom, TheKingdom. All right, The Kingdom, and when you type it in, I want you to type in The Kingdom like this. That's a great tag. We appreciate Twitter. We really appreciate Twitter. Okay, because that's a beautiful handle. The Kingdom, I love this. It's perfect. We're the Crypto Kingdom. So Crypto Kingdom has The Kingdom. Perfect. So at The Kingdom. All right. You'll have to click on that and click on follow. Shoot me some sort of a DM or something like that. Shoot me something like that. And make sure that you can message me or do something in the VIP. Let's say this in the VIP section of the YouTube. Hit me back and let me know your Twitter deal. Okay, let me know your Twitter deal. your Twitter handle, because we'll do things called spaces. All right, spaces on Twitter are kind of live personalized chats. Okay, personalized, personalized. What are they going to be? Personalized. Discussions, spaces. A lot of the bigger players are having like spaces, discussions on spaces. So now, what you're going to want to get into as you look at this was drawn out. I drew this out. It's programmed. When I mean programmed, guys, ahead of time, you're going to essentially know this. Like I knew the trading lanes. I put the trading lanes up. You guys saw that be perfectly perfectly respected. Okay? This duration right here. You really have to get out the magnifying glass on this. All right? But this movement sideways in time upon this trading line. Look at this. Let's go to the next candle. Dun-dun. At this teal line, this little green teal line. Good time. It's a perfect price action to the upside. Transition. Perfect price action to the upside. Let's say this transition on the bodies of the candles become important, down to the bodies of the candles. This transition over from 1 hour to 2 hours to 3 hours. This is 1, this is 2, 3, 4. So we're looking at 4 hours of duration right there. Then we get up to the next dotted line, right? What do we have? Bam, another transition into another hour interval on the candles. Then we have here, my pups. Anyway, as we look at this, another transition. You guys like dogs, you like Doge. I assume you like pups. I'd love to see pictures of your dogs. Throw them up in the Twitter or whatnot. As we look at this top level, bam, we see another transition into another candle. Right? And as we look at this, guys, you can't get much more exact than this. This is from the previous pricing interval right here. You want to know, well, why did it hit? You guys know why it hit. I've been explaining essentially that to you before I put it up, and I told you I wasn't going to tell you when to sell. Right? And I think some of you sold. That's okay. Good job. You made some cash, right? You probably covered your whole year's dues on the VIP. So very nice. Let's see what we got. That is just this level right here. Let's bring that interval over. Bam. I brought that interval over right to here. Bam. All right? Perfectly on top. I don't want to give you advice, all right? I don't want to manage your money, okay? As much as we try and look through the technicals. And guys, I'm a very technical guy, so, that's just, I like to outperform. I enjoy doing that. I like to generally work on lines. I like to work on the lines, right? So I like to bring in the componentry on the lines if I'm working on the Fibonacci's, the retracements. Now, it's not always practical to do that. Why might I choose the candlesticks versus the lines? If I'm working on the fly and I'm looking on something and I want to be more aggressive or less aggressive, I'll work on the candles. Okay, sometimes that it will present an opportunity for you to work in a more aggressive fashion or more conservative fashion if you're on the candles versus the line chart. Okay, it's just the truth. You have to understand that dynamic. The candle's it's going to express the entirety of the price action, whereas the actual line is going to be kind of more of a consolidated approach. Okay, the consolidated approach is just going to be different. You can do either one. I'll tell you to do either one. Neither one of them is incorrect. As you look at this, do you want to draw this up? You can. Are you ready to draw up a retracement and become involved upon the different levels? Have you already sold out? If so, I'll tell you, for the people who sold out, who saw this and bam, they took advantage of it, okay? But the people who took advantage of this immediately, we put up this previous gain interval. We put the gain interval right here. People who want to take advantage of this, they've already probably programmed into a different schedule. Okay, they've programmed into an acquisition schedule on the fly, immediately going into a kind of a recoupment phase. I want to bring this up because I like the way that this looks. I want to show you guys what level this is. All right, as we look at, and we can do it one of two ways. Let's do it both ways. Let's look at this way. Let's look at this in terms of the circumstance that it presents us. All right. Not getting too much exact here in terms of the retracement. A lot of times I'll draw on the lines. This is my standard MO. I will draw on the lines. Okay, I will draw. I think the dogs want to go to the pool or something crazy. I don't want to talk about what the dogs want to do. My little pups, take the dogs to the pool, do whatever you need to do. Okay, as we look at this, I don't know, we'll talk about clubs, pools, all that fun stuff. You guys will enjoy. What are we talking about here? Let's look at the actual price action on here in terms of this, candles. Okay, look, see, that's where I like to get into. That's where this becomes a little bit more relevant. I always draw on the lines. I draw my Fibonacci's on the lines. Then I look to the candles to express some action. I will typically go into a candle view if I want to exit, if I'm looking at an exit strategy, okay, in line with the threshold here that's been met previously. I just tell you that. This was constructed during during this event here. You're not off by much. You're at 54, it went up to 59. Okay, you're off by 5 cents, about 10%. No problem. In the meantime, people who got out, the timing was kind of impeccable, guys, but I put up this gain frequency here, and then people decided, okay, I guess that's the limitation. Yeah, and that essentially it was the limitation. That's why I put it up. But I'm not going to tell you when to sell. Yeah, I'm not going to just say, everyone sell now, everyone buy back twice as much at the lower price. I'm not going to do that. That's not technical. That's not technically sound. I'll present the information like this. If there's a reasonable exit price that's calculable on a Fibonacci extension, I may express that to you guys. I think things look phenomenally bullish. All right, I'm not worried about people making money on Doge over the next number of weeks. I'm just not worried about it. I think it's going to be phenomenally bullish. Okay, so and I'll update that statement in the VIP lounge as necessary without qualification or hesitation. That link right up here, you guys can join and get the pricing targets. Now, we switched from the line chart to the Fibonacci's, right? What did that give us? Well, if we look real closely, that gives us the exact level that people got back to, is at about that 50% level, 50% retracement. All right. Now, I can look at whether or not this is behaving like something that's maxed out. There's a lot of different things I can look at right now. If you guys, I already know you're good at looking into a retracement. What is a retracement? Well, you got 50% of a retracement. That's an opportunity to get in at a 50% kind of retracement proportional kind of discount. That's the amount of retracement, the percentage that it has retraced. So yeah, that's nice within this pricing interval, not 50% discount, not 25 cents on 50. No, within this pricing interval, 25% retracement of this price action. So that's nice. That's nice. People have been able to get in at that 50% level, right? You didn't quite hit your golden pocket yet. That's kind of a structurally important level to get to. So in terms of, you want to say, well, where is it? What's it going to do? The question I got earlier on was from, I think Adam shouted out a question for everybody. He said, once it touches 50, what would you expect? Well, I didn't answer that right then. You're still at 54 now, and you went up to 59, you went up to 60, right? So not irrelevant, a great question to ask. I just didn't see that as a key indicator. A lot of you guys may have seen 50 as kind of a barrier. That's okay. The 49, I saw less of a pause, as we look at this, because people want to know, I mean, what analytics are you kind of basing this on, what theory? But yeah, I saw these are from last night. These are my trading lanes from last night. The 48 was more significant than the 50 in terms of duration, in terms of the formation of new candles. Now, the 50 was touched back at essentially the 49, really. But this even on this retouch down to the 50% retracement on the Fibonacci, you guys see that 50 wasn't even that important, which is really nice because people aren't hung up on 50. Guys, we were hung up on 40. Was it 45? So I don't really see with this kind of price action why we'd be hung up on 50. These trading lanes are kind of independent of like round numbers. We're going to just go to 50. We're going to go to 49. This is at 59.9. So this is about at 60. That's okay. I can see 60 being more so important than being more so an indicator than 50. 50 is kind of like it doesn't match up with, we haven't been trading in 5s or 10s or something like that necessarily to like a quarter and 50 and 75 and $1. We haven't, it sounds like we're at an auction. We haven't been doing that, right? I'd love to be able to do that stuff. I don't think I can. I'd like to be able to try that. But we haven't been working in increments of, say, $1 or a quarter all the time or something like that. It's been a little bit more, kind of generic in terms of its growth. So that's where we're at. Your guys are still well in the money from last night. I would just anticipate you continuing to do well in Dogecoin. If you're going to play the strategy of selling and buying, what I fear right now, guys, this is from the station standpoint, you have to understand this. For the people who understand it, I'm kind of throwing this up here before, okay, in and around the time it's up in here and doing a threshold analysis. For those of you paying attention and involved in the market, you're like, no, that's it right there. We just did this. Those of you who are paying attention, you're going to get that. If I talk to people, understand this, if I do talk to people about doing that quickly and entering their trade, getting on their phone and starting to push buttons, understand what happens. They get out and then they can't get back in, potentially. Or they don't know how to program and calculate up their Fibonacci retracement inputs. You see that? When we're dealing with something this fast moving, I have to be careful about the information I put out there. When I say I'll never tell you guys when to sell, it's not that I won't give you an exit price. I won't do some derivative kind of carryover analytics based on solid, financial technicals. It's not that I won't do that. I've done that kind of stuff in advanced calculations for, since right out of Duke. That's what I did on the $1 billion equity fund. I'm very good at analytics. I've prepared reports for CEOs of major corporations like that go to all the shareholders that have to be perfectly exact on mergers and acquisitions and due diligence, everything. I've done that level of work. I can definitely do that. But I can't sit there for people and give them all the investment figures and let them know these are the reinvestment levels so that you can trade this zone. You see how you understand the complication there? So that's essentially that's the dynamic I run into, is that if I give people a threshold limit, this is it. I can kind of present that. I'll give you kind of the indicator there, but do understand if people just if they parse out and we're in a really aggressive bull market, which we are, just understand that I'm setting people up to potentially not be able to get back in at the right price. So unless you're sophisticated to that level, and if you are, you already understand by the time I put up this green line, you're like, yep, right. So that's just essentially that's it, guys. I can't really be responsible. And I don't want to bear that responsibility of telling people, get out, go ahead and get out and just get back in at 15% lower. Because I don't know the dynamics. I don't know, I assume you guys in the VIP zone, I know the guys in the alpha zone that they get this without a doubt, the alpha traders. I anticipate the guys from what I'm seeing in the VIP zone that they understand what's going on. Still, the application of it takes time. It takes the ability to run in your pre-calculated figures, whatever your figures are. Okay, and this is not a warning cone, guys. The warning cone is just amounts of capital. That's it. It's just amounts of capital that are heavyweight towards the bottom. So there's 100, 200, 600, 1800, and 5400. That's just a sample. It's just exactly a sample of something that makes sense in terms of having more cash at the lower levels of retracement. Everything's going to retrace, guys. Everything retraces. So as we look at this, literally on these levels of retracement, yeah, we're just talking about exactly this. And let's expand these out. I don't know how to expand these out. Maybe that next level will get it to us. Let's see. Close. That's close enough. Let's go to the next one up. Hopefully this will do it, just so you get a good look at this. That's pretty close, huh? That's pretty close. So as these go forward, I just, the retracements are kind of this along these lines right now. This is a little bit more conservative. Some of you may have decided to put the aggregate in at the 50% or at the golden pocket. This amount of money more or less can be thrown in at the different levels. Unless you just want to say, I'm going to play the 23% retracement. You want to get the best price you can. It makes a difference if you make 10% on your money, guys. If you do that 7 or 8 times, you're multiplying your money by 2. So if you're going to be doing the market anyway over a period of time of a week or 10 days, you might as well multiply your money by 2. You're involved enough watching the videos and doing everything else and wanting to say, everyone wants to be a trader, right? Everyone wants to be a trader. So that's what we focus on is on the fly, very quickly being able to, and all this is more cash on the downsides that plug into these different retracement levels. That's it. That's what we're working on. That's why they give us this. These retracement levels are where the price is likely to go to after a move up, based upon the initiation, after the initiation of the price, where it's going to move to after it goes up, essentially how far down it's going to go. That's the retracement, okay? It's a small correction. We don't call them corrections. It's just the retracement, okay? It's a Fibonacci retracement. That's the technical jargon and the technical theory that we're capable of understanding it as. So you guys, on the fly, what you're going to run into is I have to gauge which ones of you are capable of immediately doing this in 2 seconds. Bam. Coming up with, every time you do that, it's going to come up with your investment figures. And then I'm assuming you guys have some, you've got your own strategies. But these are levels of investment. Some of you hit that 600 level right here, okay? Maybe that kept your 1800 and 5400 on the sidelines. That's okay. What if you hit that 6,000? What if that's 6,000 for you? And what if that's 18,000 below and 54,000 below? That's okay. You just made, on every 10,000, you essentially made $3,000 in around this time with the application of this threshold limit. So again, you guys have paid for your membership within, I'd say, for the year based upon last night's video. So good job, good job, good job. This reaccumulation strategy, don't ever feel like you've missed out on something or you don't quite capture it. I would work on your speed. If anything, if you guys are wanting to get into day trading, and you don't recognize this, people don't understand it, but you want to get involved in your agility, okay? In how quickly you can just bam, 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 there we are. I want to bring these over. I've got my investment levels, okay, right here already calculated. I've got my amounts right here. I'm going to plug those in immediately. I'm going to work this bullish trend. You may do that, or you may customize your scenario and say, forget that. I just want to handle the Fibonacci's golden pockets immediately, and I have one bulk sum of $10,000 in a bull market. I'm gonna throw it in at the Fibonacci, put my levels in. When it goes up to another pricing event, which you can structure out ahead of time, I'm gonna do the same thing over again. So you may work golden pockets, okay, with one bulk sum, or 50 percentiles. You may work a graduated scale like this. I like to hear what you guys like to do. What is your strategy? I say do your own calculations. That means tell me what you guys do. I like this because it's used by some of the top traders in the world, guys. It's used by some of the top institutional traders in the world. So that's what I focus on, is a double down, triple down, heavyweight approach. That's just it. Peppering in lightly at the top. Just peppering in lightly at the top. And then underneath, doubling down, and then tripling down, tripling down, tripling down. Okay, you can make you can make this essentially more accessible if you decide to move up your scale here. I don't really recommend always doing this, but if you want to become more aggressive, well, I want to engage things a little bit more strongly here. Okay. If you want to do that, I understand now. You want to move up. You're essentially, all this is the Fibonacci retracement is very good because it's predictable. But if you want to use it as a calculation tool and become more aggressive, you can condense these pricing targets. Watch these pricing targets right here. You can condense those pricing targets and engage your cash along with the same kind of rationale of the deployment of your cash at lower levels. You can do that in a really bullish market. I don't see much need to do it, but if you talk about, well, I don't want to leave this cash on the sidelines, fine. Still work your fibs real quickly. Graduate that up until where you say, okay, I'm going to move this up to a predetermined level. I'm going to cut out a third of this every time. Bam, I'm going to cut out a third. I'm going to get more aggressive on this. You can do that. Make that be your approach, but make sure you're very careful about which investment instrument you're in, whether or not you're in a bull market, whether or not you're in a bear or a consolidation kind of zone. Make sure you know what you're doing there, because that's some advanced techniques there that guys, you don't want to get washed out. I'm going to say that you don't want to get washed out of any one trade. And I mean, just everything's gone. Like, what happened? Well, they liquidated you. We don't want that to happen. I don't like to hear those stories. Don't like to hear stories of people getting over involved at higher levels. Don't like to hear stories of you guys getting washed out or liquidated completely from your accounts. I always talk about having cash at lower levels. Having cash at lower levels is a level of insurance. All right. So always just understand that you need that. It does look like we're going into a very predictable kind of, we're flirting around with going into something beautifully around 53 cents. I'm just going to bring this up from last night's deal. If you guys went in heavy, we talked about some heavier amounts of cash, the likelihood of it to go up, we literally called that last night, and you're at about, that's your 20% mark. I'm happy with 20%, guys. Someone tells me they made 20%, beautiful. Last night, people telling me they called this out perfectly after watching our channel. They called out the consolidation, the retracement, and then potential consolidation. Your consolidation is an opportunity to reacquire at a lower price. So people sold here, that's fine. It's very well done. It's right in line with this threshold analysis that we carried over from here. We spent an hour on the threshold analysis from here. Okay, you guys know that. We spent an hour going through this, essentially showing you the beautiful dynamic that this creates and the trading opportunity. Then we did right about the time that it got up to here, we brought in this over here just to say kind of, that looks interesting. I don't want to tell you guys when to get out and when to get in. Unless you need your Fibonacci extensions, and we can get into the extensions, and we're going to start talking about probabilities, okay? But this is a threshold analysis, so it's reached its threshold for how long? I don't know. It's going to let people reacquire. So right now, you're going to look at a reacquisition phase right here, and I would anticipate things to continue to do well for Dogecoin. Okay, and I will update that as necessary in the VIP lounge. Not that that's any information, but misinformation. But as things need to be updated, as they always do in the market, I'm going to update that to the VIP lounge. Okay, so the VIP zone. So we appreciate you guys joining up to that VIP level. And again, we think you've already, some of you already paid for it with the channel. And that's the idea. You guys are doing well. You want to be treated well. And yeah, I don't know if you guys like stogies and like nice things, or you like jets and nice things, and you like different stuff, VIP. Like, let's get used to it. Let's trade and do well. Let's expose ourselves to the kind of that lifestyle without being excessive. We don't have to be excessive. We can enjoy a screenshot of something or something along those lines. Let's look out at. Let me see what we have on here. I'm just looking at the chat real quickly. You want to see the chat. And yeah, I appreciate all you guys. I want to shout out again to the VIP guys, because you make this happen. You and the alpha traders really make this happen. Spend a lot of time with those alpha traders. You guys know that. We have some sessions today that are going to go off well. That's with Kenny Kent and Kenny Crypto, Kent, and Bianca will be doing that today. Also, Alan, Chris, I'll be meeting with you guys. Appreciate y'all's involvement. And the big shout outs for the VIP go to Lars, to Kent, to Matt, to Jellica, to Bent Frog, to David, to Soho, New York in the house. So happy. To Jeff and to Paul. So you guys, congratulations, and we're gonna try and make sure and get you these pricing targets as you need them. That's a commitment to you. We're gonna treat you well, just accommodate your needs there, and it's gonna be in addition, I'd say, to you guys who are involved in the Alpha Trader program. I would anticipate you guys are gonna move along with the group also to the VIP and maintain whatever you're learning. Make sure you can learn, because if you've already learned, guys, if you've been a part of that learning process, you already knew when we threw this up. Bam. Okay, I'm not gonna publish to 2,000 to 5,000 people immediately. Just sell. I guess if the coach blew the football whistle one time, he could blow it again. I did do that. But literally, someone blew a whistle on a TV behind me. It was like the coach is blowing the football whistle. We didn't exactly get that. I think actually, if you guys will recall, if you rewind, there was this time there was a car alarm that went off. An alarm went off. True enough, guys, if you look back on the tape, you'll get a kick out of that one. Other people here, first time it was a football whistle. This time it was an alarm went off. And around here, I ignored it because I didn't want to tell people when to sell. I was very careful about this time because I'm not giving you financial advice. Promise me that you guys understand that. We'll get into some more specifics of kind of how things can work in the VIP lounge. But it looks like we're in a great, fantastic. What I like about this, you guys understand now. It's like, yeah, now we're in a retracement. Yeah, now we get to pick up some coins. Yeah, we get to apply our pricing models, the heavy, the double or triple down. If you guys haven't seen this, let's do this. I want you guys to go over and review the tape that is the tape that is labeled "How to Buy into Crypto." Okay, let's see, Doge. Where is this? Crypto. How to buy into crypto, guys. This one with just 1,000 views right here 6 days ago. This little primer right here, how to buy into crypto. Yeah, without overpaying. That's going to be something that's going to be real interesting for you. Now, you want to couple that with kind of the information that we're going to be able to segue into the VIP lounge, the VIP club. So that's exciting. I love that our trading lanes worked out perfectly. Again, I don't think you're going to see, I know you're not going to see this anywhere else. It's going to be larger dynamics and kind of some hype, etc. And we're going to beat the market, man. Even when it's doing really well, we're still going to beat it. If it makes 25%, we want 50. If it makes 50, we want 100. All right, we want to double it. We want to double and triple down, and we want to double and triple our overall stacks. So that's what we're involved in. You guys, I so appreciate everything that you've done, and 20% times 3, Jeff. I love the interaction here. You guys can head over to Discord if you would like and continue to talk. Let's I think that's on the Twitter. Red Raider, hey, good to see you, brother. Nice to see you here. I just ran across your name. Been missing you, brother. Texas, well represented. Yes, Texas in the house. Let's see, that's great. So we'll talk about some other altcoins later on. We do bring you options or different categories of investments, or maybe different, not categories of investments, categories of coins for Bitcoin to XRP to Ethereum, etc. If you guys want more input on that, we do our live streams, our live action streams, also to the VIP group, that is capable of wanting that information. Not everyone wants that. Sometimes they want to generalize, and Dogecoin makes it easy because Dogecoin is very popularized right now. It's getting beat by Atari today. I'd look at that. That's interesting. On what's the price action on Atari? We want to know. We'll look at that later on. So I want to bring that up to you guys, and we got other lists like that. We take a look at waves, at Atari, at Doge. We want those outliers. As I look at these and I sort through, bam, look at these: Atari, Doge, Waves, Link, Litecoin. Yeah, we look at all these things. So, and we're looking at the price action behind these. Okay, the price action behind the ones that are down, maybe heading towards a golden pocket. We manage all this information, so we try and print these out in the morning and kind of review them to be able to bring the most up-to-date kind of information based on the Fibonacci's and where things overall are headed. It's not just the price right now; it's where are they headed? Are they going to head to another position? Guys, this involves some kind of some sort of technical framework to be able to do all this. Understand that it's not just easy. I put up the trade lanes, no problem. Oh, it just happened to be that. No, guys, very dedicated in terms of the output here. Very dedicated. But as we look at this golden pocket and the 200% plus that's made since then, yeah, we want to know target in on this, okay, target out here. We want to know which ones of these also present that type of a dynamic. So that's what we focus on. So when I talk about printing sheets in the morning, look at Fibonacci's cross sector. If we do print screenshot or we actually physically print, we're talking about books that are made. We're talking about kind of rolls and sheets. possible investment. So we do that for you, and we appreciate the opportunity to do that for you. We're going to go ahead and close up shop because it's been a great morning. I need to go hit the gym and the iron, and the track for a little while. So stay healthy in what you do, eat well, sleep well, invest in those relationships that you were involved in and thought knew were worthy of investment before you got involved in the market. And never be afraid to take profits, guys. It looks like you've maxed out here. I look forward to hearing from you where you have maxed out. You're about maybe 10% off of the high. Again, it's going to reconsolidate, guys. I would anticipate that we're going to move, that we're going to continue to experience bullish price action. Guys, Elon's going on Saturday Night Live. We're going to watch him, and it's going to be fantastic. I'm looking for a great demonstration of that, and I think we're going to do well. The trick is, as we do well, can we do better than just well? Let's do great. Okay, that's the goal here. You guys have a good day, and we'll come to you potentially live later on, and I'll be peppering through some comments through to the VIP section. One more shout out, Lars, Ken.